Hello, everybody. Welcome back to another episode of The Market Close. It is Tuesday, August 20th, 3:44 p.m. So definitely on time today. There's no way we're not on time, but I'm accounting for the delay as well, because when it delays 30 seconds, it'll be 3:45 for you guys, and I will officially be on time. We got a lot to talk about. Today. We will be joined by Jason, aka Paper Gains, in about 20 minutes or 25 minutes, and we're going to break down everything in the world of TA. Because today is Technical Tuesday, so get your tickers ready. And when he joins, honestly, if you guys have been here on previous Tuesdays, if you look at the chapters after the video, we go through almost 20 tickers. So we'll do the usuals: Palantir, Tesla, NVDA, and then we'll get into some new ones like PayPal today. That is the only thing that I think that's green today, and PayPal just showing phenomenal strength. So we'll get to that in about 25 minutes. PayPal right here, 71.94, up 3.62% off a partnership with Adyen today for back-end payments infrastructure. Now, although everything else is red, Netflix is a little green. It hit all-time highs today. Eli Lilly's green. It got a big upgrade from Wells Fargo. We kind of expected today to be a red day. I mean, Palantir 32.34, basically flat. Palantir went all the way down to 31.70, came right back to 32.34. So by the end of the day, market decided actually it was 31.63 on the bottom. So if anyone got that, I don't know if that's the dip, but at least on the intraday, that is the dip. Came basically right back. It was just 10 minutes ago, it was 32.50 where it opened. So really not that big of a decline. Robinhood was at 2020 on the day. Now it's at 1989. Again, not that big of a decline. Rocket Lab down 7%. It was up almost 40% over the past couple of days. So I think the decline we've seen and the red we've seen today, it's not really that big of a deal. It's kind of what we expected. S&P 500 has 12 minutes or 14 minutes to tell us if we're going to get red or green for the 9th day in a row. If we get a green day, that is the 9th consecutive win streak of the S&P 500. That is the 12th time in history that'll happen, and only it has happened. The last time it happened was 2004. So I don't know. We'll see. We got 15 minutes to see if we end up closing green, but even if we do close green, it's going to be barely green. So relatively flat day for the broader index as well. So nothing too crazy in terms of like actual stock movement today, and that's because over the past couple of days, things have been pretty good. 10-minute power hour incoming. Yeah, let's see it from 3:50 to 4 if we actually get the 10-minute power income or power hour coming. Ray, Jeff, GE, John, Ramu, thank you everybody for being here. David, Elaine, Mark, Jill, Vibob, I'm Beneficial, Ricardo, Nolan. Thank you for being here. I think we'll get started with the biggest news of the day. This is what's taking up a lot of attention today, and it has to do with what we talked about this morning, which was Kamala Harris's new tax policy at 28% for corporate taxes, up from 21%. Today, she came out and she said, you know what? Not only are we doing 28% corporate taxes in every for corporations in America, I am confirming, this is basically what she said, I'm confirming my support for a 25% minimum wealth tax on individuals worth $100 million or more. In addition, she would raise the capital gains tax to 44.6%. Now, we talked about this a couple days ago, and I had a feeling she was going to come out and basically say, hey, whatever the Biden administration said for their fiscal year 2025 budget, I agree with, because why wouldn't she, right? She's in the Biden administration, so obviously she would probably agree with those policies. And today she came out and basically said, yeah, I agree with this, and this is my public campaign as well. This is the specific proposal. What's really getting people upset is that it's not just a 25% minimum wealth tax on people who have $100 million or more net worth. She's taxing unrealized gains. So the proposal is applicable only to taxpayers with wealth greater than $100 million. That's paintings, equities, real estate, whatever constitutes $100 million. The proposal would impose a minimum tax equal to 25% of a taxpayer's taxable income and unrealized capital gains less the sum of their regular tax that would make up the wealth tax. Let's just say people in the investment community are not that happy about it. And we've got a lot of tweets going around just saying this is ridiculous. This is going to turn America into, a place where innovation simply stops. And ultimately, it's going to get rid of a lot of momentum in a growing economy that still has 2% GDP. We talked about yesterday the bull and the bear case for raising corporate taxes to 28%. I think that's a different topic than actually taking away 25% of an individual's unrealized capital gain. For those that don't know what that means you buy NVIDIA at 85, it goes to 150. You're up, $65 a share, and you don't want to sell. So you still have a capital gain that's unrealized. If you're worth $100 million or more, the federal government at that point takes a certain percentage off those $65 a share. Now, what if NVIDIA comes back down to 75 and you're down $10 a share? There is no answer or remedy in terms of what's going to happen, right? Or how that money actually comes back or not. Tom Lee weighed on this subject. He says this is a very unstable tax policy, would be the opposite of creating incentives to be long-term oriented. And again, say it would apply to Bitcoin as well, right? If you buy Bitcoin at 50, it goes to 70, but you don't cash it out, you still owe tax on the $20,000 of capital gains. Now, do I think this will actually pass in Congress? Not really. The only way it passes is if the Democrats have a supermajority in the House and the Senate, which are the two branches of Congress in the United States, and they win the executive branch. So they would need to have a clean sweep. That's how Obama got past the ACA, Affordable Care Act, back in 2010. That was one of his major policies he got passed in his 8 years of being president. And that's because he had a majority in all three parts of government. When you don't have, and that's how Trump got the tax cuts passed in 2017. So you really need to have a clean slate in order to get those types of radical policies done, whether it's tax cut, 25% taxes, or something like the Affordable Care Act. I don't know if we're that united in the United States of America to give the Democrats or the Republican the House, the Senate, and the executive branch. So we're going to see how this plays out, but not really one of the most popular opinions right now. Again, it kind of feels like she's saying it to get votes. It kind of feels like she's appealing to the angry base that hates corporations or hate people that's worth $100 million or more, and trying to get some momentum out of those voters. And you know, I don't know if anyone in the chat here is worth 100 million. I'm sure maybe there's one or two of you here, but it's not about being worth 100 million. It's about what it means from a progressive perspective. At what point does 100 million become too much and it goes to 50 million and then 25? I mean, $25 million is a hell of a lot of money. You're in the top 1% of the entire planet. So is there really that much of a difference between 25 and 100? And that's the logic that people start thinking about. And then it's like, well, why are we doing 25%? Why don't we do 35%? It's a very slippery slope, which is why venture capitalists Mark Andreessen and Ben Horowitz, who have historically supported Democrats, they run one of the largest VC funds in Silicon Valley. They've invested in pretty much every company that's big today. They are supporting Trump. And you know what's interesting about this? You know, there's some unique politics here. Ben Horowitz, not only has he been a lifelong Democrat who's now going for Trump, he's married to a black woman. And historically, if you just look at the trends in America, black people tend to vote more Democratic. Now, I think that's going to change, especially around black men in this upcoming election. But there was an article by, I forgot the name, I think the San Francisco Daily, one of these independent news outlets in San Francisco, because their VC fund is in San Francisco. And they're basically calling his wife a sellout because her white husband is voting for Trump. And so they're associating Trump's perceived racism by the black community onto this man and his wife. It is really dirty stuff, dude. Dirty types of politics is going on right now. And that's where we are in the United States, where, you know, if you have a black wife and a wife who, you know, is part of a demographic that tends to vote Democrat, and you who've been a Democrat your whole life and you go Republican and you put out a, 90-minute podcast explaining why you're voting for Trump, not because you love the guy, but because you run a VC fund and you have to make money at the end of the day. You have to make investments and not get taxed to an oblivion. You get tore down by the media from a racial lens. So I think we're going to have a very interesting November and see how this plays out. But that proposal has not been well perceived, at least in the broader stock market, as it was released by the Wall Street Journal 3 hours ago. Fear and greed, we are officially at neutral. We are out of fear. We were still in fear yesterday, and the S&P was 2% from all-time highs. So today we moved to neutral. That tends to mean things slow down a little bit. Maybe we don't get massive gains after we've gone up almost 10% from the August 5th lows. But we're going to see how that plays out over the next couple of weeks. Jay Powell, again, is going to be talking on Friday. And what he says is what the market has their ears to, in terms of figuring out, is he actually going to be dovish or is he going to be a little bit more hawkish than not? Here is a specific report on what he's expected to say. So let's pull that up right here. Fed Chair Powell risks not saying enough to satisfy market expectations in his remarks at Jackson Hole. BNY's John Velas says in a note, he expects Powell to sound dovish, but we don't expect the speech to be heavy on specifics, and it's unlikely that key questions about the size of the first rate cut or the frequency or length of the cutting cycle will be answered. Now, this goes against Evercore's report. Evercore came out yesterday and they said, no, he's going to be very adamant about 50 basis points, or at least set up the table for being explicit around the number of rate cuts and the length of them. BNY says, actually, we think he's going to be dovish, but he's just not going to be that specific yet. BNY expects a 25 basis point cut in September, but says that a weaker than expected August jobs report due before the FOMC meeting could result in a 50 basis point move. Speaking of jobs, tomorrow at 10 a.m., it's going to be very, very important because the BLS, Bureau of Labor Statistics, is going to come out. And they're going to say if we lost jobs or if we didn't lose jobs. TLDR, we definitely lost jobs. But the question is going to be, how many jobs did we actually lose? And I think that's also why we're getting some market volatility right now. So here's a report from Bloomberg. Goldman Sachs and Wells Fargo economists expect the government's preliminary benchmark revisions on Wednesday to show payroll growth in the year through March was at least 600,000 weaker than currently estimated. So about 500,000 a month. So the expectations are, hey, we're going to lose 600,000 jobs. And the whole thing is comical. It's like we can't even accurately. This is why I'm saying the Fed needs Palantir. The BLS needs Palantir. How are we not getting these numbers right? Like, these numbers determine the fate of the freaking economy, and we're like revising them because like we have inaccurate surveys or they're lagging. It's just absolutely insane. But looks like it's going to come down 600,000. JP Morgan disagrees with Goldman Sachs. They say, hey, it's only going to come down 360,000. Some estimates again are pointing to 1 million. I think, gun to my head, the market sells off on that. I don't think the market's going to like that we have way more unemployment than expected. I do think that ends up being a buy the dip because eventually the market realizes, well, unemployment is not 5-6%. We're still adding jobs. There was this chart we looked at this morning. Here's the chart again. It looks like, given the JOLTS report we got, unless that's totally wrong and there's just all these jobs that are open that are actually fake, there are still enough jobs. There's more jobs per unemployed person than unemployed people. So from a 0.8 to 0.6 ratio, which is not that bad. I mean, we still have jobs available. And if you do rate cuts, hopefully the economy and the market is stimulated enough to be able to start hiring, especially if you do 75 bips by the end of the year, which the market might price in and, get excited about. And that should take equities higher. So we're going to see. We're going to see how this happens. But it is absolutely insane to me that we have to revise these numbers. And we need something like, I would argue, I know I'm biased here, but we need something like a Palantir that can actually aggregate all this data and make sense of it. And unfortunately, I don't think we have that. Speaking of Palantir, 3233, Palantir did get a shout out today. And the shout out was from our good friends at Lowe's. So Lowe's had earnings. We talked about it this morning. Really not bad earnings. They missed on some of their numbers because most of their home buyers or most of their shoppers are home buyers and house sales are down. But Lowe's basically said, we're going to be fine when we get the rate cuts. And they said the consumer is not in a horrible situation. So they actually said the consumer is doing fine. So this is what they said on their earnings transcript. We are working with leading platform providers like OpenAI, NVIDIA, and Palantir to deliver AI solutions to our customers and to ourselves to improve how we sell, shop, and work. So if you didn't know that Lowe's was a Palantir customer, that's been known for a long time. I think Carp took a picture with them a while ago. I'll see if I can pull that up. And they've been working together for a while, but to get the mention on the earnings call is very important because at the end of the day, that's just showing you that these companies want to shout out Palantir publicly and show to the market that we are transforming via AI and that AI is being done by a company like Palantir. Now, what was also really interesting about this is that Microsoft gave a shout out to Palantir and called them a leader in their industry, Satya Nadella, back in early August. That was a pretty big shout out. Now, Lowe's CEO saying, yeah, we can't really do anything that we're doing without Palantir, which is also a really good shout out. And I think more and more companies that are public that are getting real transformational value from Palantir, if they start saying, hey, Palantir is like the real deal and this is not a joke and we're really using them in a meaningful way, I think, again, that compounds the media attention that we've been talking about in the context of Palantir and gives them more momentum. Here's the Carp picture with a Lowe's employee. I think this came out like a year ago. So we know they've been working together for a while. But today is where the CEO felt comfortable enough to say they're actually getting value from AI via Palantir. So not bad at all. Amit, what numbers do you think lift the market tomorrow? Honestly, dude, the market's expecting 500,000. I think we would need to lose 300 to 250 to 300 for the market to not care that much about the job revision. We need to lose an amount. I don't know if it's 250 or 300, but it needs to be something that's so insignificant in the broad scheme of things that the broader market's like, this doesn't really matter too much, right? Like, it's not a big deal. Now, if we lose more than 1 million, I think this is why, I don't know if people bought the dip today, but I was thinking of buying the dip. I was thinking of buying some more Robinhood. I looked at Palantir at 31.75, but then I was like, wait a second, tomorrow actually has a legit chance of being a dip, like a good 2-3% down, just because it's irrationally, the market's kind of afraid of more unemployment. So I held some of my buying power. I didn't engage it. And I said, you know what, tomorrow, if we go green, then great. If we don't, then I think tomorrow we would get a juicier dip. And so we'll see what happens tomorrow. But that jobs number at 10 a.m. is going to be very important to figure out where the rest of this market goes. Are you buying puts into tomorrow? No, it's not one of those days where I'm, if you're trading, yeah, and you want to hedge against some protection, sure. But I don't think it's a cataclysmic event that takes the market down 5%. So I think it's something the market's not going to like. They're going to have a little hissy fit about it. and then they'll move on because they know Jay Powell hopefully is cutting those rates. By the way, one of the Fed presidents came out today and he said, hey, inflation might go to the upside. And I saw that quote and I was like, buddy, we're at 2.9 on the CPI. We got to stop this talk. But these Fed presidents sometimes, they're just a little too hawkish. Tuesday, August 20th, 4 p.m. The stock market is now closed. All right, markets closed. I didn't check the S&P. Let's see if the S&P has its 9th green day in a row. It does not. We were down about $1 today on the S&P, down about 0.16%. It's green in the after hours, but we were down on the day. So that ends the 8-day winning streak on the S&P 500. Not bad. Probably was needed. We'll get Jason on in about 10 minutes, and he'll tell us from a technical perspective if this is good, bad, if he thinks this is a little hiccup today, what to expect tomorrow from a technical perspective on the major indices. Let's check out IWM did, but that is the end to that 8-day win streak for the S&P. IWM also was green, down 1%. NASDAQ had to be green. NASDAQ was down about 0.21%. Notice they are down, but dude, it's down like less than 0.5%, less than 1/5%. Yeah, the QQQ just a little bit over 1/5%. Like it's not really, a major red day, which is why the dip wasn't that attractive today to indulge in. But overall, stocks stayed relatively flat. Netflix was a big mover, ending at $6.98. At one point, it was $7.05. I asked on Twitter if people thought it was overvalued. Overwhelmingly, more people said it's pretty overvalued. I kind of agree. 44 PE, $300 billion market cap. I do think they have a moat. I don't love the moat or love the valuation, but we'll do some TA on Netflix. We haven't done Netflix, I think, ever on the show. So we'll look at that. Spotify was up today, 346. SoFi stayed relatively flat today, down about 1.2%. NVDA, I posted on Twitter a long list of different leveraged ETFs. So if you want to go to my Twitter and check that out, I didn't know NVDA, which is 2x long NVIDIA, has 5 billion assets under management. Dude, like most ETFs that are like thematic, they can't get even $100 million, but 2x NVIDIA has 5 billion AUM. So, and a lot of people have made a lot of money on this thing. It's up like 400% this year. But there's a lot of thematic ETFs I found out today about Google, Meta, Amazon, etc. And you know what I'm going to do? I'm going to make a watch list and put all those all those leveraged ETFs in a list. And then every day we'll look at those because we're probably going to see a lot more volatility to the upside or downside on those ETFs. Meta, 526, basically flat on the day. Robinhood, 1983, that's down about 2.2%, probably down because Bitcoin was down a little bit. By the way, Robinhood is back to top 20 in the App Store. It's now number 12 on the App Store. I did get the invite today to Miami. They sent me a notification. They said, hey, do you want to come to Miami free at the new event they're doing? But I will be in India, unfortunately. So I will not be able to go to that event. But I'm excited, dude. It looks like they're gonna really make this event big. It's a 3-day event. They have tons of speakers. I think the new platform they're going to launch is going to be a big deal to get more traders onto the app. And that should only continue to help their momentum. By the way, August volatility has been amazing. We did the options analysis on Robinhood yesterday. They've already done 41% of their total Q2 volume inside of Q3 within 1 month. If August continues to go the way it's going, or even stays relatively flat, I think they're going to have another month, which is just massive. And that's going to help them hopefully get to 40% growth again in Q3. Let's look at Mag 7. Where did NVIDIA end? Tesla was down today, 221, NVIDIA 127, Amazon 178, Google 168, Meta 526, and then Microsoft here green 424 on the day. Apple also green at 226 on the day. All right, folks, let's bring him back to the show. Technical Tuesday. We're going to be here for the next couple hours, so strap in, get a ticker, get some food, get a drink. I've got my blue Gatorade here, and it's time to talk some TA with the man, the myth, the legend, Jason.
Oh, what is happening? We are in.
Up, man.
We are in.
We are here, baby.
How's the day?
My day's good. My day's good. How are you?
Good. I haven't even checked your Palantir today. Let me see.
You haven't, and we've been holding above 32, but we haven't cracked 33.
It's up there. So you tell me, man, how are you feeling about the market right now? I know that you and I both have an idea of what might be coming. I heard you mention it here just a little bit ago as well. But how are you feeling about tomorrow?
So I was actually going to start off asking you this question, then we'll get into TA, but I'll give my take. I think we're going to be fine. I do think tomorrow's going to be volatile, and I think the market probably is going to sell off a little bit because that number is probably going to be bad. Now, I'm going off what the banks are saying. The banks are saying, hey, it's going to be 500,000, a million, so I'm just assuming they're right.
Yeah, I think I heard about like 500,000 something. I just don't know. Like your viewers, the people I trade with, most of us are kind of up to speed. You know, I just don't know if the broader market really is ready.
Well, some people are saying the market's priced this in.
That's what I'm. So, you know, last time we talked, I was kind of, and I still am, like in the mindset of, hey, we are probably going to revise all of this stuff down. And by the time it's all washed out, we're going to be coming out of a recession that had already happened months and months and months ago. Right. And that's been my kind of sentiment. I mean, since like any recession talk actually came, we had 2 quarters of negative GDP back to back, and it was just kind of like revised away. And I was like, that was October. I honestly feel like that was the real recession. And this whole thing was kind of like, we were lower, like the recession was happening, but you know,
I agree. And I think tomorrow is going to be a little hiccup. I do not think it's stopping the sort of bull train that we're on. I think NVIDIA is going to crush. So I think even if we get another million, I don't think that pushes unemployment to 4.4, by the way. You would have to
that's important, right? I think that, you know, after we get through Jackson Hole, which is going to be a big deal event, then what's next, right? So the market's always looking forward. It's NVIDIA. Right? So it's going to come down to NVIDIA. Maybe, just maybe, Jackson Hole's a sell the news event. And we have, look, what are we, 1% off the highs now? Something like that.
Yeah. Roundabout.
I mean, really close. There's one kind of like hiccup for me. And that's, I don't know if you've been watching this or following this, but Bitcoin. So I posted some stuff on Bitcoin. We've talked about it a little bit. It's just not doing the deal. Right?
Oh, trust me, I know.
So that's kind of like the, okay, timeout first. Normally, risk on environment, we would have seen Bitcoin, like we should be seeing Bitcoin at 70, right? You'd think so, but it's not. And it's honestly, it's towards the lows of the year, I believe. No, not the year.
Yeah, but you did say it takes off in Q4. So.
I did, but even still, and IWM, I think, takes off in Q4 and all this other stuff. But if it was really truly a like, let's go risk on rally, I believe also that we would have seen Bitcoin going a lot more than we have. And it's just been kind of stagnant. It's not really going anywhere. It looks like it's going to fall off a cliff. And then the next day it looks like it's going to go up to the highs, and it ends up just going nowhere right now.
Do you have any theory on why you think momentum is not coming back to Bitcoin?
I hope it's not the election stuff. It's possibly the election stuff. I believe Bitcoin. Does Bitcoin have an event today, right now? Actually,
today? No, I don't think so. Not today.
I think there might be an event today, but I was watching this kind of level, and you can draw it across. This is 57.6, give or take. You know, it's not. What's true is it's not over. It's stuck. This is the box that she's stuck in, right in here, right?
Yeah. Dude, it's been annoying. It's been annoying for the Bitcoin proxies. It's been annoying for bulls.
So it's funny too. Bitcoin. Did you see Coinbase today?
Yeah.
Oh my!
I saw you posted a bear flag. It was not pretty.
It was not pretty. And honestly, for the first, I mean, if you're zoomed in on a small time frame, like the first whole like majority of the day, you're just looking at Coinbase, and it's just like this straight shot of death. You look like, oh my God, this thing is just dying. That's what the day looked like on Coinbase.
Well, the problem is their trading volumes are going to be horrendous next quarter if Bitcoin doesn't get moving. So, I mean, the market's pricing.
Is that true though?
Yeah, their trading volumes sucked in Q2. I mean,
well, don't we like buy low, sell high? So maybe they bought and now now people are selling and they're getting that spread.
But
maybe.
Well, so yes, but unfortunately, once you sell and they get the one-time spread, you need people to buy back in. Like if people take their profits and they go to fucking Palantir.
That's fair. They go to Palantir. Oh,
I mean, they go to something that's more fun. That's like Bitcoin, I said, has given blue balls all year.
Well, this is funny. So you would think, Bitcoin proxy, even Coinbase, to our earlier point, it's like nothing is a proxy 100% to crypto. It's either crypto or it's not. And these are stocks, right? They have different risks. This is not the same chart. This Coinbase chart does not look anything like Bitcoin, right? To be fair. So even intraday today, Bitcoin's flat. I mean, if Coinbase really was, and I don't know if there was Was there a headline on Coinbase?
Well, that's the other problem. There's no headlines at all around crypto. But after the Trump speech, I had a friend who sold a lot of Bitcoin after he saw the Trump speech because he realized Trump didn't say anything important. And he sold, I think at like 68, 69. He sold right at the short-term top, I would say.
Man. So. Yeah, so I think it's important to know where we are. Look, we've had a huge rally off the lows. I think being being like reasonable with your expectations. Look, stocks don't always go up. They don't always go down. Most of the time, they're actually just kind of going sideways, right? Like Bitcoin's going right now. That's the truth of how these things work. So,
okay, can we start with S&P? Let's start with TA.
Yeah. So I'm on SPY right now. So let me take down some of these levels. So we do have,
and guys, right after SPY, we'll do Palantir and Tesla. We'll get those out of the way, and then we'll get into all the other names.
Tesla, hell of a trade, by the way. And pretty much all of our targets, pretty much our near-term targets have hit. So just as an FYI. So this is kind of like that breakdown area on SPY SPY. So I'm gonna use a little bit different time frame so you guys might be able to see it a little bit better. And let me try and zoom in slightly. Does that look better for you?
Yeah,
hopefully.
Yep.
So this right here, I don't know what day this was. It could be a day. I don't think it's like a non-farm payroll day. No, we're actually way above all of that. But this day right here, this is Thursday, July 24th. This was where the real breakdowns actually started, and that was a breakout. So we had broken out from this high at 557. And honestly, I think this is going to be a really important level from here moving forward, which puts us today at a pretty like interesting spot in the market. So these, you can see this. I don't need this anymore. This can go away. All of this area here. And then this moment right here is what we call like an SR flip, where this was support, 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 and then turned into resistance. Does that make sense?
Yeah.
And so today we kind of just barely peaked over it, and I can take this down. We do have what's called a session gap. So I turn my aftermarket hours on, and then I typically look for areas where there's absolutely zero trade. And when I say zero trade, I mean from this session to here, there's not a single trade that went through. So this is notable. If we do get to the highs, this area, that's basically an imbalance in the market of where, like, if we do continue to the upside and we get something like that, you need to know that, hey, look, this is full upside target complete if you're trading, and it's likely to have at least a pause or a bit of a pullback in here. But as long as trajectory is up in that direction, it's likely fine.
Let me ask you a question. Was it really bad today that we didn't try to crack all-time highs?
No.
Given we were green for 8 days, is it normal today to take a break?
Is normal for today. So what we have, and I'm going to move this to a daily. Are you familiar with candlesticks and how they work?
I mean, I look at
maybe not.
Not sure
this
exactly.
might be like, this is like second tier. If you've ever noticed my charts, by the way, what I don't have are a lot of these indicators flying left and right. A lot of what I do is like raw, what we call price action. I think, by and large, indicators are very much lagging. I think my least favorite is like RS. They're used improperly the vast majority of the time. I'll tell you guys which ones I use, like simple moving averages, or if I do use oscillators, like how they work, things like that. Like this is one down here. It's not RSI, but it's a type of what we call oscillator. But this is telling me also, hey, look, we're nearing kind of like a peak, and we could be coming down pretty soon. This is on a daily time frame. And then when we talk about candlesticks, that's essentially what today's price action looks like. And we're pretty much closing at a very like tippy top. And that's this candle.
Is this good or bad, the close we had today, in your opinion?
It's neutral, definitively neutral, right? Because it's not, we didn't really go up, we didn't really go down. But what you should know is that if tomorrow, and this is what's important, if tomorrow is red, like if we open red and in the early hours start to extend lower, God, let me move. If tomorrow's candle looks like this, let's say, big red. This is what it will look like, right? And how this kind of situation, or let's call it candle, really forms is that it's going to be an open below today's low, right? Or today's closing price. And then we're going to start to extend lower in the early hours, or maybe it's a gap down, and we don't get over this very important 557 spot 18 right now. And that's going to be like something like this is a gap down, and you bounce on it, and then it rejects through. But whenever you have this kind of neutral candle, the market's like, oh, wait a second. It doesn't mean it's a short, because here, we sometimes get it like this, and then it continues to go higher. And sometimes we get it for a few days in a row until we finally get an open below like this and extend lower. And then the following day is likely this is similar as well. So these type of, and there's another one. It's a kind of like stalling action. It's like, okay, market's extended. It's going to need a rest. You get this, and then you get sometimes a gap lower, and then a flush, and then we could have something like that. So tomorrow, if we're lower than today's close, is possible. I heard you mention like 2% day. This right here is what that would look like. This kind of candle right here. And so you will know as a trader, and this is on SPY, like SPY on indices. If we do open red in the morning, basically just if we're opening red, and then maybe it tries to go back to neutral, like flat, and then stops and then goes back to red. Okay, that moment is when you're like, okay, maybe start to hedge. You could potentially hedge ahead of time today, but just know it's like we haven't technically broken the main level. We don't have this kind of setup just like this yet. Does that make sense? But what is true is that we're at a kind of a stall point. So the market's a bit exhausted.
That's what it feels like. I would imagine it's exhausted after 2 weeks of going up. Right?
Yeah, because there's also these things, right? So there's these moments here where like, hey, look, what I'm saying is that it's not like you want to do this now, because a lot of times we get it like this, and this just happens to be green, but it could have been red, and then the next day you open above, right? So like if you're looking at, let's say this day, let's say just this day, this is August 12th. You could say, hey, look, this looks exhausted, but then we actually had some data that following week, and we actually got a gap up, right? Same thing here. It could have looked exhausted, but we have a gap up. So that's why I'm saying it's all about tomorrow. So if tomorrow we open below and we start to extend slightly deeper into the red territory, that's your kind of sign. But for now, it's this 557. If you want to be really, like careful, you could call it 555, and just take the top of this candlestick here and say, like, it could go slightly lower. Let's say we have something like that tomorrow. That's not horrible, because then we could have a Jackson Hole event that looks like this.
Right.
So I definitely don't think it's a spot to sell everything and run. It's not that at all.
Are you hedged at all going into tomorrow?
I do think it's a place to recognize that, hey, we've come a long way off the lows. I should go home net long, but potentially hedged on some of my longs as well. And at the end of the day, if you do that, you don't need to be like buying a ton of time right now. You can, because the VIX has finally come down. Like volatility is actually pretty inexpensive at this point. So it's not a bad idea to go shopping for a little bit of insurance.
Oh, wow. VIX was up 8% today.
Yeah, today. Right. But look, it's down like 70% from the, whatever, right? 65 highs.
Yeah.
But the looking at VIX today, knowing that, hey, it was up 8%, we're actually towards the highs. When the stock market and the VIX are both going up at the same time, which we were kind of going up slowly today, but the VIX was climbing pretty much all day, that's like your yellow flag, if that makes sense. Yeah. So, yellow light, pump the brakes just a little bit, and then take a look. Do we buy puts on Qs or IWM? Yeah, I mean, I think so. We've talked about my IWM position for a bit. I actually did today open some IWM hedges. So it's very similar here. So these lines, by the way, on my screen, I'm going to take down some of this just so you see it. But, the gray line is a 20-day simple moving average. That's essentially exactly what we ran into today. Kind of extend above and then close slightly below. So today, I did end up hedging my IWM. If it was just from a raw, like I was saying, price action or candlestick perspective, what I need to know is that we've rallied into pretty decent off the lows from sub 200s into 215. And we essentially filled what we call like this gap here right into an area of resistance, right? What was prior support here, breakdown. Is this area right here, right now going to act as resistance, or can I reclaim it? Meaning like go slightly over it, and will it hold into support? For right now, what's true is that it hit that pretty much yesterday, opened slightly below it today. That's how I knew, okay, today, boom, I got a hedge.
Right. Okay, can we do Palantir? Let's get into Palantir.
Can we do Palantir? We can do Palantir.
No, we got to start with Palantir every time, every Tuesday.
I should have Palantir like already prepped for you, huh?
I mean, we're holding 32, dude. It's fucking incredible.
Dude, you are for sure.
Incredible, bro. Like, it is defying most expectations by everybody.
That is true. Ooh.
I guess my main question here is, do you think this is way too overextended? Because the fundamentals don't really justify this valuation. Or do you think the technicals are good enough to keep it going?
So stocks are either running or resting, right? And so, sorry, we got like sponsored by this Lux Algo team who's doing these like they give us these indicator stuff. So I'm actually testing one right now. Let me clean this up so it's not on my. So we've always talked about this level. I think we're right off the lows here that we're holding. Similar to that SPY kind of situation. And oscillators say it's a bit much. These 2 days, Palantir. Here's what
I feel like you want to say it's going down.
No. Well, I don't know yet. I will say it doesn't look like it's going up just yet. What's true, right, is that unless it's over 32.75, it's not going up.
Right.
I don't think that's disputable, right? And you're essentially in this box right here. And so, like, because of that, remember, stocks are running or resting. So far, the last 2.5 days, Palantir has been resting, right? And so what you're going to be looking at, and you guys probably don't hedge that often. I
think there's definitely, I don't hedge that much. I'm sure people in the chat definitely hedge with puts or short QQQ.
So it's going to be, for me, I think, not at 31.50, but really like 31. Because
we hit 31.60 today. That was the low.
Oh, higher than that. So, I mean, it's somewhere in between 31.50 and 31.90. Right? Like somewhere in here, you could give it a little bit of room, but what you don't want to do is you don't want to open a hedge and have it instantly go against you. And then you're stuck like playing around.
Wait, you think 31.50, if it breaks that level, it's coming down, is your point?
When you say break, right? So like things can break levels and they can toy with levels a lot. So it's in technical analysis, it's very important to define like what break means.
What I mean is close below 31.50.
Open and close. Okay. Open and close, right? So like you can open above, you can open at 32, close at 31.45, and then the next day open at 31.75 and continue on to the upside. Does that make sense?
Yeah.
So like it's that daily full candle, like that full daily candle that ends up essentially like down here. It's either a full candle open and close below, or what it is, it's 3 candle closes below. So just because it closes below once, it doesn't mean it's going down. But if it closes below once, opens above, okay, closes below the second time, opens above, okay, closes below a third time, opens above. That time, 3 times you're out. You're likely not going to do it because it's tried to push higher 3 times. It needs to go lower to find more buyers.
What
does
does
that make
your
sense?
Yeah, that makes a lot of sense. Based on the charts and your understanding of fundamentals, does your gut tell you 32 is justified? Given price discovery, volume sell, and
You're putting me in a hard spot. So I'm actually, from a fundamental perspective, what's the market cap here?
72 billion.
72
81 times the next 12 month sales.
I mean, I've worked with a lot of $100 billion companies in my day. I don't know that. So things can stay overvalued for a really long time. I don't know that this is justified right here from a fundamental perspective. But at the same time, there's not a lot of other options that are like at the application layer, legitimately profiting from AI.
Well, that's my take. Is like, even though the valuation's up there, the market doesn't really see what the AI say. And this GPU thing doesn't matter unless there's a software use case of it.
Yeah, and you're definitely like biased to the bullish side. Correct. There's that. So what I'd say, if you get 3 daily closes below 3120 like in a row, and it's been chopping there, I would definitely be looking to sell some upside calls. And if you want to get as an investment, I don't like to sell a lot of calls on my investments, because most of the time I don't want to sell them in general. So like I'd have to be way far out there. What you can just do a protective put, because a protective put on this one, it would take you sub 30. It would take you back to that 2750 kind of level. And that's like $4 on Palantir. What's cool about Palantir is like, dude, they're not really expensive options, to be completely fair. Like, they're really not. I can look at, so like I can look at September option chain right now, and I'm looking on a different screen. September 20th, there were $1,028 puts open today for about $40. That makes a lot of sense to me for a medium term hedge. I don't see people buying like a lot of time to the downside. I mean, I don't know. Chris might have bought some $15 puts for February 2025. That's about it. Or maybe he bought the $25 puts for Jan 2025. But like, it's not a lot of time to the upside. I do see some hedges going on though. Net though, the option chain is skewing bullish. Just 2 to 1, two calls for every 1 put traded.
Okay.
Yeah.
That is fair.
And volatility, on Palantir, volatility is very inexpensive right now. It's the 23rd percentile, so it's pretty cheap, man. It's cheap insurance, definitively. But I wouldn't go out and the thing about insurance is like, you don't want to spend so much on insurance that you lose on your position overall. So not a whole lot of time, just situationally into this possible event, because I don't know, like. Or even like $33 puts, right? Like in the money, slightly in the money, $33 puts for September as a possible hedge. That's about 10% of the underlying. And then if it does come down, take that profit around 2750, close it out, right? And then you can potentially accumulate more shares around that level.
Right. Okay, let's do Tesla, and you can tell us how your Tesla position is going, because I know you.
My Tesla position, I'm out majority, right? We talked about this before. We talked about 220, right? 216, 220 starting to be like, oh, we need to protect profits and possible.
You had 240 calls, right?
Yep, but I had them down here when we were talking on them last. And I said, when we got here, this is about from this swing high to this swing low. This is the same chart, I believe. I said about somewhere in this area, right up here, assuming that at 216 to 220, I want to be taking out the majority, and I'm going to be up 50%. Today, these calls are up over 200%, depending on what your entry price was. Call it like anywhere from 150 to 200%. You should be net green, right? But right into this trouble area. And so the way this is planned for me as a trader is that I take, let's say I bought 10, right, at $200 a piece, and they closed today. I know they were at 700 at the highs. Oh, they were 830. These opened at $835.53 this morning. I did not get the 850 exit.
Yeah.
And they closed today at $610, which is still up 200%. So let's say you bought 10, right, at 216, somewhere between 216 to 220. I want to be out probably like 5 to 8 of my original 10. Does that make sense? Yeah. And so if I bought 10 at 200, that's $2,000, right? At $600, that's $6,000. If I remove 5 of them, that's $600. That's more than my principal, meaning like my initial capital, right? So 600. Let's say I take 2,000, my initial principal, plus I put $1,000 in my pocket, and I have $3,000 left on the table. That's just if I sell half, right? At this point, I'm out more than half, but that's a trader, right? Like, protect your profits, protect your principal, and you're good for that. So at this point, I really can't.
Is the chart bullish or bearish to you?
I think the chart is possibly neutral. I think that this goes in a little bit of a rest. Remember, these were for September also. It's not a lot of time. This is 30 days left, but I'm okay if it chops around a little bit. What I want to see is I want to see that 216 level hold, right?
Do you think there's a run before 1010 at all?
Yeah.
To what?
That's kind of why I chose the strikes I chose, because I don't want to buy the October volatility, right? Because that event, actually I might take that back. They're not pricing in. I feel like they were doing this earlier.
You think the market has not priced in the 1010 event?
No, I don't think. What I'm doing right now is I'm looking at the options series. If that makes sense? Let me. How do I pull this out? Detach.
Yeah, guys, we're gonna do NVIDIA next, then PayPal, and so.
This is gonna be really hard to see because I cannot zoom on this, right? Oh shoot.
Honestly, you don't even have to show it, dude. I mean, we know you're looking at those.
Yeah, man.
NVIDIA, PayPal, SoFi, and then I don't know why people love Fubo so much.
I'm not doing Fubo.
Well, I'm sure you had options on Fubo.
No, I'm not doing Fubo. It's too cheap of a stock. So here, can you zoom in for them?
No,
is that possible?
No.
So like, this is Thinkorswim, and this is the platform that I use. On the right hand side of this, what I'm looking at, you really cannot see.
Yeah, you don't have to show it to us. It's not a big deal.
What's important, right? The right hand side, this is volatility, right? So of this options chain, right? Like these are series or expirations. 1018 has 58% implied volatility, so it's about 5 points higher than September, which is really, that's not a lot.
That's not a lot for one of the biggest events ever.
No, and like current IV percentile 33%. These are the stuff that like I have to use as a trader. But like this is what when you said you don't think, I'm like, I'm not thinking here. I'm reading data. Right. It is not. It's. I'm actually shocked that it's not priced in more. It's a lot of this is priced in for November's at 60%.
That'd probably be on earnings in November.
Possibly.
Okay, but so what levels do you want on Tesla here to affirm a bullish?
October 16th is earnings. So that really? 1018. Okay. So 1018 is mispriced. That's what I'm looking at. It's underpriced right now. They should be more expensive. That's what we just found out together. It's a good buy. They're cheap. They're mispriced.
So this 220 level, do you think this is bullish, I guess, going into that October event, at least for now?
I don't think it's 220 exactly. I think it's this 216, right? And it's this whole kind of like shelf, if you will. So this kind of peak in volume right in here. So if this can hold, and like I said, I think that Tesla can pull back to like 215s even, but as long as it starts to chop in this area like this, I don't think it breaks out, but I think this is constructive to going to that 240, just like this.
Right.
I think that's constructive. What I don't want to see is I don't want to see that net new daily open below 215 like that. A daily open like this down here would be not fun, because in that case we would likely go back to the 200s and retest 200s. Do
you think the rate cuts matter for Tesla, given they're giving 0% APR right now, or no?
I think they actually do, but I don't know if the market cares. Yeah, but I think as a business they actually do. I mean, Elon has said in the past that they do.
Right. Okay. Cool.
Oh, do you have back? I didn't realize I have AC on. I never forget to turn off the AC.
Oh yeah, you always have the AC on.
My bad,
dude. I walked out today in New Jersey. It was 65 degrees. I was like, "This is too cold. What's going on?"
That's crazy.
I was like, "I'm used to 80."
My gain down too. I'm
like a little tinny.
That's perfect. Sorry. All right. What was the next one?
NVIDIA.
Oh, so NVIDIA, we talked about 1, 2, 3, right? 1, 2, 3. That's this level. 1, 2, 3.
Yeah.
Even.
Yep.
And as long as, let's call this, we're gonna call this like this is your bull and bear line, if you will. So across the board, as long as NVIDIA is over 123, this is kind of like your midline for the trend. So it's trending higher over this. This was that, was it Monday? Yeah. So today's Tuesday.
Yeah, today's Tuesday.
Yeah. So this is wild, right? So like we rallied right up into it. And then Monday in the pre-market, that London session, we actually pulled back and held it and instantly started to bounce. And even like the opening trade 123.50, that was good for like a solid bounce into 130. And I think this one's kind of in the same situation where like, okay, I couldn't believe like how far I'm like, NVIDIA's how much off the lows? Like 40%.
It went up 40% in the past.
It doesn't feel like 90 to 125 is like 40%, but it is, right? That's also a lot, right? So I think you want to continue to watch that very critical level. As long as it's holding around here, I don't think that we break out, but don't forget we have earnings. I think we might get another retest around this 123 level. And as long as that's holding, I think that's good. So like as a person who might be really interested in NVIDIA, I think how you take that is like as close to or below 123, you could be buying. But above 123, you don't really want to be buying. You just want to be holding and letting it continue to run to the upside. So below 123, I think I'd be as an investor in like possibly near-term accumulation, medium-term accumulation mentality. And then above it, I want to be like protecting my profits and maybe start to downsize. Net, this is a bullish trend, but at the same time, things like we've just come a long way off the bottom. But I don't want to put net new money to work above that level.
Do you think earnings goes good from a technical perspective on the chart?
From a technical perspective,
like if they beat and raise
on earnings itself, like doesn't matter, right? Because like it's going to be a fundamental event that changes the technical story, right? Because it's going to change the valuation, right? Like whatever happens is going to change your PE on NVIDIA. Even if the chart's higher, it may end up being a cheaper stock after earnings,
which has happened every single earnings for NVIDIA.
Right. So you have to understand that, right? The technicals that you have as of today more or less get thrown out of the window after earnings. So all you can really look at from here now is like, okay, what does the chart say into the event? And a lot of times as an investor, if I want to build into a position, I'll actually buy in like ahead of the event. I'll plan like I never try to actually pick the bottoms with my stock purchases. I'm like, I don't have time for that, man. Like I trade, like day trade, but like I don't have time to try to pick a bottom, right? So I'll plan like 2 or 3 tranches of purchases, and I might buy like one, like right, like in front of the event, or maybe 2 if it's low. And then as it starts to like make its ascent into the earnings event here, I might trim a little bit. And then the third planned purchase, like and then after the event is a planned purchase. So hopefully I'll start to like even out on my cost basis, if that makes sense.
Yeah.
But never, ever full position at once. Never, ever full position ahead of earnings. I don't ever do that.
By the way, real quick, let me show you guys this. I just came across this picture on Wall Street Bets. So so you just said never do a full position before earnings. Someone did a $1,400, $120 NVIDIA puts. And
yeah,
they're a little down on those. You know, maybe they end up being right. Maybe NVIDIA is
28%. Not 8. What is that? September?
8/30, August 30th.
Oh, that's like next Friday.
So he's down 30% right now, but if NVIDIA tanks to like 100, he's going to be up a lot. But as of now, I think you got to go down with the ship. There's no way you let this play out without seeing it happen, because you're already down 200 grand. I mean, now granted, I don't think NVIDIA is on a scale of 1 to 10, or let's do this. NVIDIA what do you think is more probable, 150 or 100 after earnings? Given you've been an investor for a long time on NVIDIA. What do you think?
150.
Why?
The most probable thing is that you see NVIDIA at 150 after hours in the post market, but it never actually trades there in the live market. Like honestly, because it's so illiquid, right? Like,
I found out over the weekend 65% of the shares are held by institutions. So they definitely are long the stock. And
so as an institutional trader, and we talk to a lot of them, right? Like we trade with a lot of them. Where you're coming into that circle now, right? Like you're on Twitter. Yeah. Well, I've seen you on spaces that I've been on. And
I thought you said I'm an institutional trader. I'm like,
no, but you're actually entering that sphere, right? Like you're getting in there. But I will tell you that you have to own it. Right. If you're a hedge fund and you don't own NVIDIA, you can't not own NVIDIA, because then your investors are going to be like, what are you doing? Right. Like what's happening? Like you can, that's not true. There are funds that don't own NVIDIA, but like if it's
you have to be a bit like Stanley Druckenmiller can get away with not owning or selling NVIDIA because he's Stanley Druckenmiller, but
yeah,
most fund managers can't justify that to their clients.
Yeah. Especially like if you work for a large firm and they're like, dude, you're missing the best stock in the market. Like, what are you doing?
Yeah.
But I think, I look at this. I don't know. That's Wall Street bet YOLO, dude. I would say,
who buys 1,400 contracts? Like that is like
10,000 were traded today.
Maybe he bought them
today, right? And 10,000 were also traded on the 110s today. I say traded. So like things get really wild. It's definitely more skewed upside. Look at like 40,000 130 calls today for this expiration.
Yeah.
People like to gamble, dude. YOLO. I tell you what, I don't tend to do this, but
I usually never play earnings. I'm always scared to play earnings.
I trade earnings a lot, but I trade them differently, right? So I never take, I try not to take, I never say, you can't say never. I try not to take directional plays. The trades that I tend to lean towards are the neutral ones where like, look, this thing's overpriced and I'm going to sell premium on a neutral trade, if that makes sense.
Okay, let's do
this is where we're at. Big move on NVIDIA. I think it's time for a rest. You want to see this at least holding around 123. Below 123, you could start thinking about like, do I pick at this? But I wouldn't put net new money to work over that level. Got it.
All right, let's do PayPal, because this one finally broke out today.
Dude, what was that about? Somebody bought this today, didn't they?
Yeah, they got a partnership with another fintech. And That's
I think it
what
was Amit pumping PayPal today. It was wild.
it was me.
52-week highs. I mean,
wow, it is 52-week highs. Wow.
Yeah.
So my question for you here, is this a fluke, or this is actually bullish in your opinion? From the technical.
I don't think this is bullish. So we talked about PayPal a bunch of times, not yet, right? It looks better. We talked about PayPal a bunch of times. Even on their last call, they had something go on. I forgot. They had a good report, and then there were some other things happening. I forgot what it was. And maybe some investors were in there. You know, it's like activist season also, by the way. So like this is a company that I would say is probably primed for some activist engagement here. Probably. A new CEO would not be horrible.
They have a new CEO. They got him on January.
Another one.
Why don't you like my boy Chris? Alex Chris. He's not.
Dude. Shocked the world, man. Shocked the world. But like, so when we talked about last, I was like, hey, look, it's a $73 stock, right? Like, can you go from 60 to 73? That's essentially like your line in the sand. And that's where it landed, where it's like right up in here, right? 74 and change. I think you could go a little bit higher, but like if you, for me, even still, like I wouldn't really be interested in it, but unless it's like I might short it up here personally as a trader, to be completely fair, because this is a major, I mean, this is a no joke type of level, if that makes sense, right? Like this is
no joke type of level. This
is so important of a moment for PayPal as a stock, right? Like
range.
72 to 75 in here. So to me, this isn't going to get away from me. I don't need to jump in, right? But if, you know, over the course of the rest of the year, because like I said, I don't think it's going to get away from me. But if I really want to see, like, if I really want to be like an investor, it needs to look like this, right? I'm hesitant at this point right here, right now, to take any kind of breakout trades, if that makes sense. But if I saw something like this, and this is like, if I see 76.50, like PayPal's trading over 76.55 at any point, right? Then I'm interested on buying pullbacks down to this 71 type level. Does that make sense? So like, or even like down here, then I'm interested in really watching it, because what's true is that, you know, we talked about this. This is my last lower high, right? And I have lower high red. I have nothing but lower lows.
Are you out exposed to PayPal at all, or no?
No.
Gotcha.
No. The only one I was like maybe contemplating was like Square.
Got it.
But they're both very choppy, right? This is a lower high here. But then we have this, okay, possible higher low. Remember, this is how you should read this. What will confirm this is if I get a higher high. Oops. And that has to show up here. It doesn't have an option of showing up any lower than this, because it has to be higher than this. So if I get a higher high up here, then I'm interested in what? I'm interested in buying a higher low.
Right. Right.
Does this make sense? And that's how I'm not going to be trying to catch a falling knife, because anything in here, it's possible. Like, I guess it's technically a higher high here, technically. But just the same, this order block kind of comes into here, like maybe for the next pullback if you get another one, but it's not that strong. This is still like a lot of consolidation. And
what would your answer be to this person? Isn't it already a higher high? How much higher does it have to be to count?
That's what we were just saying, right? So like technically it is a higher high now. So this is lower high, higher high. Technically that's true. So like where is your lower high going to show up, or higher low going to show up? It would show up somewhere around the $68 level,
right?
Something like that. So like this is like, okay, but it's just such a small like blip on the radar of a higher high. It's there. It's valid, right? They're not wrong. But the momentum here is not enough to get, this could be going sideways for a while. When I know this is ready to roll, like it's rocking and rolling, is if this high is broken and then we have another higher low over there. Like, and in the meantime, we could see something like this. Here, it could be like, here's your higher high. Yeah. Then you have a higher low. Then this happens. And then we go out. So like, that's the thing. If I buy a higher low from here, yeah, it's probably still going to get to that 79, $80 level, but it'll pull back again right in there, which is why like the one that I would really be interested in, the trade or like real position, I would actually be interested in is something like this.
Because,
right?
Because that's a second higher low, and it confirms to you that they're in the right direction.
Yeah, exactly. Because if I took it here, right, I have the very like real possibility of this happening like this, just like that. Very real possibility of that happening and just getting blown out. Does that make sense?
Is that setting up an Elliott wave to an extent?
All right. I'll tell you the one thing you need to know about Elliott waves is that Ralph Nelson Elliott died bankrupt. That's all you need to know. I'm not a wave trader.
But you don't like Elliott waves?
It's too complicated. Like it's not that they don't work. It's just like they're too what's the word I'm looking for? Like interpreted by your own opinion. Like you could just get something really slightly off. But you know, and oh well, this wave was this and that wave was that. It's too kludgy. Does that make sense?
Gotcha. Okay, can we do SOFI?
Subjective, yeah. There you go. It's too subjective. That's the one, right? It's very, very, very subjective. What do you consider this wave? You know, ABC, whatever. Did you measure the harmonics right? And what I mean, it gets crazy in the weeds. And honestly, it's a lot. Like there are people that are really good at that. I've seen people use it in crypto a lot, but you know, that stuff is like OG. I just, you know, if you're in a move and you want to use it as an, like what I've been doing here on your show with you, using like the extensions and things like, it's a similar thing, but I'm just confirming it via price action and not anticipating a move before it's happening. And I think it's Elliott waves is very, very subjective. Got
it. By the way, JD.com is down 9% after hours.
Yeah, China's a tough place to be over the last, I don't know, decade.
All right, let's do SOFI. Let's get that one out.
SOFI was looking good the other day. I haven't looked at it today. What is it at?
It's down. I'm
scared to look.
But
huh?
It held 730, which was good.
No.
Yeah, it held at 735.
Oh, no. Okay, we're not going yet. It's close. Man, I still think it's Noto's time, but this chart is struggling.
It's in a 3-year downtrend. At what point does that break out?
Over 10, like if it's trading well over 1050, like that's when you know it's breaking out.
Well, that then gets into debate. Then I mean, if it trades at 1050, it will be trading at a higher tangible book price to book than every big bank in the United States of America.
Is that true?
Yes, it's already competing with some of the JP. Like I think Wells Fargo trades at a lower TPV than SOFI, which is the debate. But now SOFI is growing way more than Wells Fargo and JPM, right? So that is the debate that comes up around, is it justified?
No, I think SOFI, like if they get the student loan refinancing and all that stuff, like there's a lot to benefit from. I
just think the rate cuts are going to help them a lot. That's my bull case. Like at least,
but that's what I'm talking about. Like the rate cuts, then they'll be the ones that'll benefit from the refis. I mean, it's just definitively in consolidation. The only thing, like I like the story here on SOFI. I don't hate this at all. I mean, it's a bank to me, but
well, let me give you a trade, and I want to ask you what you think. I like, and I don't have any of these yet, but this is for the chat too to check it out. I like the 710 June 2026 call debit spread. So I would buy the $7 call. I would sell the $10 call on top of it for June 2026. That's trading at 91 cents right now. It's a $3 spread. So that's about a 329% return if SOFI is $10 in the next 2 years. I'm not asking for 12, not asking for 15, not asking for 20. I'm asking for $10.
Yeah.
Or just the June $10 call itself. You know, I don't think that's horrible either.
Oh, geez, I was trying to find this tool the whole time.
So
20, I didn't realize that. I didn't realize you were a spread trader, dude.
Dude, that's all. So I actually, I'm very ideological about this, and this is Chris, you know, kind of being infused to me. I don't like buying.
Oh, okay, that is a Chris trade.
Yeah, I genuinely do not like buying calls unless I'm protected when things go bad by selling the short side on top of it, and it's worked out very well for me. It has helped me deal with theta decay, and I like the spread leaps. I really like, even though it caps your profits, right? I'm still okay. Yeah, I mean, if I make 4x, that's okay, right? I don't need to make
like when you're talking about spreads, it's like when you talk about options going long calls, you're talking about optionalities. Like I have the option to buy a stock over this price by X period of time, right? By X expiration date. The only difference between buying a single long call and doing it as a debit spread is that you're saying I have the option to own SoFi between this range, above 7 up to 10, right? So therefore your max so here's the thing about spreads, and specifically spread leaps. Is Chris here? I don't know. Oh, fuckers, no spreads. Is that volatility? Options are all about volatility and understanding that concept, right? You're in the Goldilocks kind of purchase price. Like when you do a debit spread, you look at the width of the two options that you're using. So if it's 7 and 10, the width would be $3.
Yep.
You never want to spend, you want to spend about a third of that, right? So 30% of the width, you're about $100, a little bit less. You're in that kind of Goldilocks area. If you're looking at doing this like net new, let's say if your long call was $300, you'd be looking to sell a short call that's about a third of the price, right? Give or take. So that would be like, I want to sell something. If I buy a call for $300, I want to sell a call for about $100. And that's kind of going to land you in that. What was the expiration date? I'm pulling up the chain.
June 2026.
The problem with spreads in general, you're all the way out.
Yeah, and I'm going all the way out because, I mean, if this damn thing's not $10 by June 2026, something's wrong, right? Like there has to be.
It's like this. The only problem is that if you get a large move in a short period of time, you're not going to get anywhere close to that actual value. So what's really true about spreads is they are never at any point other than expiration day going to give you that full value. Like it's never going to be worth $300 ever, right? And unless it's expiration day.
Yeah, you definitely have to. Yeah, correct. You would definitely have to wait.
So let's say if SoFi is trading at $11 by next month, I would put it on, like I would bet you money right now that spread is not going to be worth more than $200. Does that make sense?
Yeah.
There's no way.
Well, especially because it's almost 3 years out. So there's like a lot of time.
Right. So you have to have SoFi just chop and slowly grind for that decay to actually work.
Yes. And let me, I have someone who's calling into the show right now. We are about to get his perspective on this. The guy who...
Is it Chris?
I mean, it's a guy whose name rhymes with Miss. So, Chris, what's up? You're on the show.
Yeah, man, I was watching. I always tune into Tuesday Technical Analysis.
Let's go.
Jason, everyone loves you. Everyone loves you. Okay, Chris, your quick thoughts right here.
He's such a good-looking dude, by the way.
your quick thoughts on spread beliefs and what do you think about those?
Chris or me?
You have to be very strategic in when you're going to use them and what kind of companies you're going to use them. And also, as Jason pointed out, you need to be very in tune with the volatility. So a lot of the times when spreads really work well for me is that I'll open a long call when when the volatility is like garbage, especially on something that's very low beta, and then wait it out a little bit. And when volatility goes crazy, like during earnings, that's when you sell the short call.
Right.
And so you're maximizing the amount that you're gonna basically get as a credit against your position. It's worked out really well against like some of the names I could tell you that did really well for me, like Verizon. Like a lot of people sold off Verizon in October, and if you looked at Verizon's a very low beta stock, and so a lot of the optionality in that was super cheap. Now here's the thing though, and Jason pointed this out very correctly. I'm sitting on a whole bunch of Verizon spreads that are gradually appreciating because they're above my short strike.
Yeah.
But at the same time, I can't instantly cash out of the position. Right. Which is a pain in the ass, but it's good to have like something that's growing, like it's mundane growing, but it's growing. So it's just a position that I fully built out now. It's the same thing with like TFC. Like Truist, when it was in the dumps, I was able to buy spread leaps on it. And now it's close to my, what is that thing called? Close to my strikes, my short strike at the top. So now I've already made money. Like I've already made pretty good money. But the thing is, it's not fully valued up until expiration. So I have to literally wait it out until expiration comes.
So Chris, let me ask you a question here. I know you don't love SoFi as a company, but SoFi's been in a 3-year consolidation. It's been pretty beat up. I don't think $10 is asking for a ton in 2 years. Do you like 7-10 of a spread, or do you think it's too much dead money as we wait for SoFi to recover?
So one of the, I mean, without giving away all my proprietary knowledge and all of this, one of the things that I try to do when it comes to spreads, number one is I don't usually have a very, narrow field in between my two strikes. What you're looking at right now, a 3x return is not good enough to pass my bar. Usually I want at least a 5x return.
But is that you being greedy, or is why? What's the logic?
It's like the math that I just did too. So I'm looking at them. You might be selling the $12
would make it better, basically.
Even since it's a tight spread, you're paying 50%. You're getting 50% back.
It's not worth it. And at the same time, you have to value it against, okay, well, what are the likelihood that it's going to get to the $12 based on a fundamental level too? Like, so you have to combine fundamental analysis to say like, okay, what is the stock price likely to be in 2026 because of what metric? You can't just say, well, I think it's oversold. Like,
right.
You got to come up with some.
You have to have a thesis.
You got to figure it out.
Yeah.
Whether it be on an earnings level and challenging like the multiples, what they should be in the future versus what they are today, and then using that. But for me, usually what I do is a 5x return. Now, why do I pick 5x as a return? So imagine right now you're in Vegas, right? If you're betting $1 and you're getting, a 5x return, that means that if you right now only have one spread position in one individual, spread company, as long as that one gets to your full price, the rest you can lose completely and you're still break even. If you get 2 right, you're essentially going to double your money. If you get 3 right, you're going to triple your money. You get 4 right, you're going to 4x your money. If you get all 5 right, you're going to get 5x your money, right? Now, the key here, though, is that you're never really going to get all 5 as a 5x, even if you do really, really good analysis. But the thing is, if you only, let's say, had 2 spread positions, because now your total return is going to be 200% on each one, that means that you need one of them just to break even. Right? You need both of them to make some real money. So the thing is, the more you spread these things out, you're kind of like diversifying your thing. So like right now, I don't just have spreads in one company. I have spreads in about 10. So now I'm pretty much hedged. I don't need all 10 of them to succeed to make a really good return. I just need about half of them to make a really, really good return. The other good thing is that over time, if I feel like, hey, I'm already like kind of doing well on a spread and I see more opportunity somewhere else, I can always cash out with like a 2.5x gain on a position and deploy that capital elsewhere if I don't see the upside in holding on to it all the way through expiration. One last thing that I'll mention, and I'm sure Jason
is not closing a position for 2.5% though. That's Chris isn't closing a position for 2.5% gain though. That's for sure.
No, not 2.5, 2.5 times. So
I
two
mean,
and a half.
Okay, yeah. I was like 2.5%.
Yeah. One last thing is I never, ever for the life of me hold till expiration. Okay.
Right.
Usually 6 months out, I'm out. The reason why I get out at 6 months is because, well, usually if it depends on the company itself, especially if it's super low beta and it's way above its strike, then maybe I'll hold on to it. But for the most part, I won't hold on to it towards expiration. Why? Because anything could happen in the last 6 months, whether it's a black swan event that takes the entire thing down, and then time is your enemy, right?
Yeah.
So imagine right now you held on to a position and you could have cashed out with a gain, but you said, no, you know what, I'm going to hold on to it because I want to eke out that last bit of gain. And what's going to end up happening is you're going to get wiped out, just because you got too greedy. So, and I'm sure, Amit, you can explain this, how that's happened a couple of times, where it's like, okay, I've had all this capital appreciation and I never bothered taking
it happened with
profits.
SOFI, dude. I was up 30 grand on SOFI, and then SOFI shit the bed.
Yeah. So, one of
there's the
things
other thing too. I mean, the structure that you put together, once your long call is in the money, especially on a leap like that, it's gonna be, I'm going to use a phrase that maybe, I don't know, is synthetically similar, synthetic equivalent to a $10 cover call, right? Leap, right? It's going to act exactly that way. So like you have to treat it like a credit spread at a certain point. Once it starts to go up, let's say that's over $150 in value, you then have more to lose than you have to gain. So you have to be a little bit more cautious there too. But as long as it's over that, you get paid to hold.
Yeah.
Now there is one thing that I did that's very strategic, but it works really well. So let's say right now you bought like, let's say, like, I'll give you a trade that I made. I bought Celsius at $65 calls. I waited, it jumped a little bit. I sold $100 calls against it. Okay. Because I thought by 2026, this thing should be $100 based on the price of sales, all that good stuff. That thing rocketed to 96. Okay. Yep. Now, valuation clearly didn't make sense to me, but I was like, okay, how am I going to maximize my gains in this without taking a huge tax, huge tax hit? Because the thing is, remember, you also have to worry about taxes. So what did I do instead? What I ended up doing was just selling, buying back that $100 call and selling a $70 call against it, right? So now what ends up happening is I just got a crap ton in credit from that position. Now it's sitting in my account as a negative carry, because essentially what I've done is taken a short position, but I've done it when the price of that $100 call was absolutely through the roof. So now I'm sitting on a whole bunch of capital that now I can redeploy in other things, but I don't have to face the consequences of closing this thing out. Right. until the day comes. So,
right. Yeah. All right, Chris. Thanks for joining. We will.
Do you have any takes on that, Jason?
No, I mean
I think that's spread.
It's exactly what you're talking about. It's about taxes. A lot of times, like, I'm in similar boats where, like, even Palantir here now, like, I just bought it the other day at like 22, and I'd be like, oh my God, I don't necessarily want to like take a short-term cap gain like that. Like what you did, we would say like aggressively selling calls, because the truth is selling cover calls as income does not protect your downside at all. Like, it does not.
Yep.
The only thing that would protect it is selling something deep in the money, like way down in the money, that would actually pull in a lot of that profit now, and then depending on when you do that expiration, you're going to have to pay taxes on your options either way. Right. So like, depending on that situation, like, I think that's where it is. Right. But once that's complete, that whole trade that you have, whether it's the short calls and like the short calls and the equity combined, it's basically dead money. So you have to just let it sit, and then you can take it down. You'll have to pay profit on both, but like you have to, like, unless you see a situation where, hey, look, I want to go ahead book the profits on the short calls here at 35. Again, they didn't protect you below 75. Like that's kind of where it gets. You could continue to roll down, but every time it's like you have to continue rolling. But
Yeah,
I think if you want to really protect it, you have to get a little bit aggressive, and that kind of gets into the situation where, like, okay, sometimes the tax man is just better to pay, right? Like at the end of the day, and like,
and when Chris is worth 100 million, he'll get to pay 25.
Well, I think it's
unrealized gains.
Not everybody's rolling like Chris, right? Like they can't just tie up a couple $100,000.
I'm nowhere near that,
right? They have other things to do.
Someone made a really good argument against it. They're like, listen, if I'm supposed to pay taxes on my unrealized gains, does that mean I get a tax credit on my unrealized losses?
Yeah.
Because I'll take that shit. But once again, I agree. I think wheeling is one of the reasons why I stay away from wheeling is for the reason that you just stated, Jason, because a lot of people think that the premiums that they capture are the ways that they can protect their downside. But then what I end up seeing is that the premiums that they end up getting, it just basically subsidizes their losses from a risk standpoint. And now they're literally sitting on dead money for years until their position gets to a place. And the thing is, like, I've also seen people infinitely roll things out too. And it's such a weird thing to see. Like, they're like, okay, I'm going to sell this covered call. And then it goes above that. And they're like, okay, I'm going to wheel that out a little bit further. And before you know it, they're wheeling out all the way to fucking like to the next, to the coming.
That's the story with NVIDIA. I mean, if you had covered calls at 80, you've been wheeling for the past 8 months, essentially.
Yeah.
So, or rolling.
It sucks. It really sucks. So I'm not a fan. The thing is, like, you're basically giving up a lot of upside for very limited for basically a ton of downside. Because remember, if the covered call doesn't work and the stock takes a nasty dip, all the losses are your losses. The gains are capped, but the losses are huge. So, like I said, from a risk standpoint, not a fan of wheeling. So, it works to some degree, but it doesn't work for me. So,
yeah. All right, Chris. Thanks for joining. We will talk to you later.
Take care.
Take care. All right, Jason, we got to move on from SoFi and PayPal.
Okay.
The next one people really care about.
Celsius did hit at 35, by the way. I don't know if it's we'll see.
You were kind of bullish on Celsius, right?
I love Celsius.
Oh, yeah, you drink it every day, yeah.
I mean, not some days, but I don't know. I think this is the spot, right? But it's not going to get out of its own way. I guess it's the growth, right? We got to monitor that. But go ahead.
Let's do let's do Robinhood. We haven't done Robinhood yet.
I closed my Robinhood, man.
Closed it? You're out?
No. The trade, right? Like the long term or the short term options. So I closed.
What was your short term option? I forgot. What was it?
I had 1950 calls, and then I had rolled up and out a week to $20 calls, and I closed those today at the highs when I saw it. Like, actually today we have what's called like an outside day. So I don't think whenever you have an outside day, are you familiar with the term?
No.
Okay, cool. So an outside day is when you have basically you make a new high. So this is yesterday's high. It made a new high, right? And this is yesterday's low. It made a new low in the same day. So
which was today, right?
Yeah. Today it traded outside both the high and the low range of yesterday. So today is what we define as an outside day. I think that whenever you have a day like this, so here's another outside day. These are tells as well. So here's an outside day, right? Where this day made a higher high and a higher low. They're tells of like, okay, something is about to happen. Typically, I don't like to take action immediately on an outside day other than just kind of close out what I have. And then throughout the day, as we were trading, by the way, it was pretty much immediate for me to close them out because we just opened. Here's pre-market highs. We did not extend at all. We started coming back in below this session. It was like, okay, close here. But
well, you were up on them a decent amount, right?
Yeah. I had them down here.
At 15, 16?
Yeah. No, I bought equity, but I'm talking about the trade, right? The option trade. It's very near term, just 19.
Gotcha.
But might remember 19 or 1950 calls and then rolled up and out to 20s. But it's kind of like, look, target acquired, right? Let's go. I think it just goes for a rest, right? A rest period for now. I think she rests. look, we got the, I think we did really good, Amit. I think like,
Dude, I think it's been a hell of a recovery so far since.
yeah, I think like knowing that, hey, here's what's going to happen. They're about to release the data on the month of July. That's going to be a catalyst for the stock. I think that whole trade plan, that's the trade plan, right? So the trade was planned ahead of time, and it did everything that we thought it was going to do. That was like we were buying short-term calls here for that release. We got the release here this day, and it didn't do anything in the post-market, but the pre-market, hello, she woke up. This day I took the short data calls down, that like the weeklies, because I just had weeklies, and then I rolled up and out to next week's 20s and closed those out today. As we're like closing on the lows. So to me, trade complete. Good job. We win. From an equity perspective, this is kind of like the do nothing situation.
Yeah.
I think it rests for a little bit. I think it can come down into this 1950s, but
I think if the jobs report is bad tomorrow, we can see like high 18s. I think that's possible.
Yeah, this is not 1950. This is like I was thinking 1950s at least, but it could come down to 19s.
Yeah.
Right in this level here. So I think it can pull into this little pocket, sub 1950 into 19s. I don't like the way that this trades with crypto. I feel like crypto's about to fall out of bed. It just doesn't, it's not going up. But this, whatever this next dip, by the way, on crypto is, I'm buying, and I think it's going to be a brutal one. But I'm pretty sure I will be a buyer. Heavy.
I agree. And the one thing about Hood is, though, I'm already guiding in my models that the crypto's revenue is going to tank this quarter, and based on everything else, they still should grow almost 40%.
Yeah. So I think we may get some price action that's similar to that, where people might expect exactly what you're saying. But hey, look, from here on out, we know that Hood doesn't tend to move without that catalyst, right? So it won't be until they have the next August. When do they release the August numbers?
Probably September 15th, around that range.
Okay, so for like a month, I think she chops in this range, probably consolidates down towards the like low 19s, if not just slightly below.
Right. Okay.
But yeah, this is not a sell. This is actually pretty good from a dip buy perspective. Then you can continue to just chill. I don't need to take profits here because we're not at like major targets. We don't have like massive gains. I can just chill. This is one where you might be able to like, okay, if you did want to do some income strategies, sell some like 2250 calls in the near term.
Yeah, I saved my cash for tomorrow because if we get down to the 18s tomorrow or low 19s, that's when I get excited. But today,
you're not positioned yet? Are you not fully positioned?
No, dude, I am, but like,
I'm locked in. I mean, I don't know. I don't know that
I'm in, bro. I'm in, but like, I wouldn't mind getting more.
Way oversized on it for sure.
No, I think I'm overweight already, but the valuation to me feels incredible given the growth, and I just think it hasn't recovered fully from the July tops, even though the market started to recover. So to me, that's a mismatch in terms of opportunity.
Yeah, no, I think that's fair. I'm just like, is there other things on deck with catalysts that might be
a little bit more attractive?
Yeah, it's easier though for you, especially like to just focus on a couple stocks. You look at what I'm doing. I have like so many stocks. It's like, okay, it's a lot to manage after a certain point.
Yeah, like not Rocket Lab. Robinhood and Palantir to me are just really.
Do you remember when I asked you about Rocket Lab?
Yeah, let's do Rocket Lab now. We gotta.
Do you remember when I asked you? And I was like, Amit, is this worth covering? Because like possible 10 bagger, and you're like, nah.
No, that's not true. Wait, when did you ask?
No, it only moves when they do launches. That's what he said.
Well, I said I've never liked space, but then I did a couple podcasts with Matt, and I bought some of it because fucking Matt was like, "Hey, Rocket Lab."
I bought some too. Yeah.
Yeah, we both buy into this.
Like, I actually like it. I think Rocket Labs is like, it's similar to my RIVN, right? Where it's like, is this a possible 10 bagger in 10 years?
Well, so here's my thesis on it. I think it's a possible 10 bagger, but I also think it can be dead money because it's Rocket.
Yes.
Like shit doesn't work sometimes. They get diluted a lot. They already did dilution 3 months ago. Like, not everything's peachy and nice with it.
I think that's right. You can say the same thing about RIVN. Definitively, right? But I think as my flyer bags, Rocket Lab and RIVN would be like my two possible 10 baggers in 10 years.
I agree with that.
Yeah,
the question is, do you want to have equity and wait it out for 10? I mean, that's
I don't think you need a lot, right? Like, I'm talking about like, okay, take 10 grand, throw it in there, take 10 grand, throw it in there. Okay, cool. Right. Or like, depending on your age, right? Like, because That's good. I think that's a good pop. It's freaking way. I'm like, do I sell some? I didn't, because I'm like, I mean, to your point, I didn't have a huge allocation to this by any means. We're not out of the woods yet. I mean, believe it or not, out of the woods is like much higher, like over 8s.
Kind of like SoFi. SoFi needs 850 to get out of the woods.
Yeah.
Or 10. I mean, you want $10, but
I mean, I think you would want 14, right?
On SoFi?
Like, yeah. 14. Would
Probably.
you take it? Would you take it? I mean, at 14. But that's the thing is like, could SoFi be a 10 bagger from here, from $7?
All right, let's ask the chat. Let's ask the
SBUX?
chat. Which one 10X's in 10 years? SoFi or Rocket Lab? If you had to pick.
Or Rivian.
All right, I'll do a poll. SoFi, Rocket Lab, Rivian. We'll do a poll in the chat. Okay, but while I do that poll, this $7.30 level, is that significant at all for Rocket Lab?
Yeah, it is, right? So like it's a very significant level. 755. We are technically locking in the lower high from this perspective, but it is firmly in consolidation, right? So I think this is definitely too early to be celebrating, because like it's not that big. It's a great win. It depends on your time frame, right? If you're in this in the low 4s, like a lot of people were, great. What you can do here is you can start to sell some, either like we were just talking about with Chris, like you could sell some aggressive calls, right?
Well, the problem is, dude, the wheeling on Rocket Lab, because I know a couple people that really try to wheel, the premiums are disgusting because there's not enough volume and liquidity.
Right. So like what that looks like is selling, I don't know, some September $5 puts, $5 calls. Right. Because it's at 755. Right. If you sold like some September $5 calls, that's fine. And like look at something like that. But like to me, this is one where like I'm just gonna sit here, man. I'm not even gonna touch it. Like we were saying earlier, if I want to have it as a quote unquote investment, I don't necessarily want to and I'm not following this company close enough to know like what the next catalyst is on deck, to be fair. So if I did know that, I might say like, hey, it might have a different story here. But anyways, at this point, it can pull back, and it can pull back to like the mid 5s or low 6s, mid 5s more realistically, right here.
Right.
So mid 5s, I think you get a pullback too, because this is a bit probably overextended. And I really want to see it kind of consolidate like that and then chug along to the next catalyst. And that would be this situation right here. That would be really good, right? Because that would be just like, hey, look, we're consolidating back towards the highs.
So two things on this. Two things. ASTS is giving this a bid because they're also space and they're up like 1,000%. And then Wall Street Bets apparently got a hold of this one. And so those two catalysts, I don't know if you've seen ASTS. You've had to have seen it. It's like,
I don't know.
Dude, it's up like 3,000% in 2 months. Why didn't you tell us about this? You're supposed to tell us about the things.
I don't know this one. I failed.
This is a meme. This is a meme coin. Like this is
dude, that's a meme for sure.
I mean, $2 to 50 or to 40. It's today's down 20%, but
I do not know this one. I mean, it's only down 11% today. Probably because I
didn't know this, dude. I'm surprised it didn't pop up on your radar at all.
ASTS.
They got a contract with T-Mobile for space satellite contract.
T-Mobile doing really?
They're doing
9 billion.
Yeah, that 9. Dude, the price of sales is 15,000.
Rocket Lab's 3 billion. ASTS 9 billion.
And Rocket Lab to me is more of a legit company, just from my understanding of Rocket Lab, and the founder.
Yeah.
But ASTS has caught a bit. There was another one, SIDU, SIDU, that was up 50% yesterday. Like a lot of these space names have been getting. Look at that. It's crazy. It must have been down 18%. Yeah, it was down 20% today.
There's a meme for sure. I don't want anything to do with that. Like that. That's a penny stock play.
Yeah, see, out of all three of them, Rocket Lab seems the least meme-ish. But yeah, I wouldn't buy it at 730. I don't feel like I don't love buying it at that.
Yeah,
level.
I guess
the closes there for the next week.
Do we sell it at 730 or 7 or 6? Right.
Well, I feel like if you're long, then it doesn't really matter selling it there. But if you're trading it, I don't know if this is going to $10. Is my point.
Rocket Lab.
Yeah, like in the next 5 months, I don't know.
I know. I'm kind of torn on it too. Right. Like it's a good quick pop. And this will be one where it's like almost like Celsius. If you just hold on too long, you might lose it all. you know.
Yeah. Well, the Celsius move was really dramatic. Celsius move was like a double. This thing has to go to 12 to get a. No, it has to go to 10. No, it has to go to 8 because it was at $4. No, it's close to that double range. Yeah.
That's what I'm saying. Yeah, it's right there. It's really close.
We have a $5 ASTS
Bugger. I just
lottery winner in the chat. Okay, before I give you the results on the poll, what do you think? Who do you think SoFi, Rocket Lab, or Rivian? What do you think the breakdown is on the votes?
SoFi, Rocket Lab.
Which one do you think everyone voted for?
SoFi, Rocket Lab. God, I hope they said Rivian, but I don't know.
What do you think? What do you think?
I'm going Rivian. That's my bet. That's literally my bet.
Rivian got the least amount of votes.
I believe it.
It was SoFi 1, Rocket Lab 2, Rivian 3.
SoFi is $70 though.
I mean, dude,
I don't know.
They're taking over JP Morgan and Bank of America.
I just can't. I cannot. 388. Yeah, I mean, I don't know. Anyways, what we were on SoFi here, this is basically the volume weighted price for the last 2 years, right? So somewhere around $7 is apparently what the market's saying. This is the average, like the mean trading volume right here. So it's at the pivot. Hopefully it continues to kind of like grind higher. You really want to see it like solidly hold 8 and not have any kind of crazy dilution happen or any type of financial shenanigans go down with the common stock. That's for sure.
I still have calls on SoFi and they're in the money now, but
yeah,
hopefully.
No, I think you're fine on SoFi calls. I so like in this scenario for SoFi, I would just say just to buy the calls outright, right? Like and not deal with the spreads. Honestly, if you know what a poor man's covered call is, you can definitely do that with the leap. Yep. I think that's to me, if I'm gonna do it, that's what I would be doing is like selling short dated premium against my long dated option and use that as my collateral to do that with. And just create like that type of income stream if it's something like this. But yeah, how much is Rocket Lab worth today? It's 3.8 billion, right? So I'm like, to 10 bagger is 40 billion,
which is not crazy. That's
not crazy, right? It's not crazy,
especially if SpaceX goes for 500 billion in a couple of years, right? Like,
yeah.
Okay, let's do Rivian.
Rivian. Oh, so Rivian is at the spot. It's at the level. This is the level where it likes to bounce, but it's toying with like death. So we'll see. I think this is worth a shot here now, to me, but not like a big shot. I think like I actually bought some equity here as I was like, look, last time it pulled back because I was buyer here, heavy, right? Sold some up here, sold some up here, but the last time it pulled back to this level, I didn't buy it back, and I kind of regretted it. So I did this time. So I just basically bought back what I'd sold up here. And then this is another one where like I think volatility is down significantly on this guy. Let me check this IV percentile. Yeah, so SoFi percentile, IV percentile 11 or 12%. Rivian volatility percentile 14%, right? That means like it's if contracts were like on a scale of most expensive at 100% to least expensive ever at 0%, this is at 14. Right. So it's freaking low. Right. And also the same reason why I would say, look, SoFi leaps, probably just buy the outright leaps, because when we talked about volatility, you don't need leap contracts are way more sensitive to volatility than they are price action. Like we saw when we had the last Volmageddon Monday, even if you were in calls, like long data calls like that, you were not down that bad. You might have even been up if you are too like aggressive, and that's just based on volatility alone. So for here now on this one, I think like longer dated is fine. Because of that volatility skew, it's a slight edge in your favor, if that makes sense. And even coming down today, like the long dated contracts were not down actually like at all. So it was a little weird. But yeah, I think this is the level. If it fails, this goes to 11, but I don't see it just yet. Right in here, I guess 1250 would have to be like my line in the sand. I think really honestly, I have it like I'm not even, honestly, I'm probably not going to wait that long. I would just call it 13, right? Personally, for a trade perspective, again, time horizon, if it's below 13, I got to take this trade down. But yeah, below this level on Rivian, sub 13, if you can get it equity wise, I think it's worth the shot again, if that makes sense.
Okay. Can we do CrowdStrike?
CrowdStrike is at a very, very tough spot. So CrowdStrike has earnings. I think this is a good one, an important one to go over, right? So we're up nearly 40%, about 35% off the lows, off the 200 lows up here.
Yeah.
35%, give or take. Side note, like that was like a lot of confluence we had. This is a 200 week simple moving average. This was like correlating with this big old volume shelf here from back in the day, right in here. Like big pivot, big support, 200, big psychological level. There's a lot of confluence to at least close your shorts there or maybe get long. I didn't get long here. I closed my shorts here. But at this point, I think that you need to protect your stock if you are long. If you bought it anywhere in these lows, I think you need to take measures. I think it's time to take measures. It's not financial advice, but I'm just saying it's time to take measures, protective measures with earnings coming up at the end of the month. You're primed for a pre-announcement, right? So CrowdStrike needs to remove guidance. They should really remove their guidance. And that could be a pre-announcement at any point from here moving forward. And that's like a really big deal. Otherwise, like this is your close, not quite. I don't think you really reclaim the whole thing, but you're right into this level 270s. This like we call order block here, up to here. This makes sense. So it could go up to 280, quite frankly. But these are like your prime rejection areas for a bear to come in. I think you take measures on this one specifically because they're not out of the woods yet. And you're probably at risk of getting a pre-announcement for like removing guidance at any point. But below 268 today, that was kind of like my level.
And you're in this, right? You bought the dip on Crowd?
No, I bought it too early, and then I was like, nah, I don't want this, and then I ended up shorting it. I closed my shorts here. I'm not sold that I want this. Just from a valuation perspective, this is when we're talking about why do you think Palantir is getting all this love? Is like I think that the growth investor that was in CrowdStrike would go to Palantir for that. Those growth metrics. Like if you're really jonesing for a company that's growing at a solid clip with solid margins, this has to come off the books, right? It's not CrowdStrike. It cannot be CrowdStrike moving forward, right? I just don't think so. At least not for a while after what went down. That said, like Palo Alto didn't have like a massive guide up, but like why would they? I think they're also different kind of companies. So, but anyways, my point is here, like, look, this is where you really broke down before on CrowdStrike, 270s to like up in 270, 280s right in here. And we just did the exercise. We saw it all the way back here to like early this year. If it gets over and it holds, I think that's fine. But I think at this point, you got a good gain off the lows. You take some type of protective measures for sure if you see this going down. That's just my 2 cents on this one. But I think you're at risk for sure of having a pre-announcement on this guy.
Right. Okay.
Which you can't really chart, right? That's just going to come out of nowhere. It would probably be like over the weekend or Friday night kind of thing. I don't know when do they usually do that kind of stuff? It's just like it's like random, like yeah.
And that pre-announcement usually is when things are bad. I mean, SMCI did that as well, so that's fair. Okay, people want to see Amazon because that has broke out a little bit.
Amazon's similar. I like Amazon. It's back into that range. Like this was an old chart. I have this at 185s, big contention level. So it's reclaimed. You know what's funny is that today, like we had a lot of the Mag 7. When we look at the Qs versus SPY's moved a lot more than the Qs have off the lows, right? Actually, a lot more. So the reason I'm talking about that right now is like the Amazon goes in the Qs for the most part. And I think this is one where like it's come off the lows quite a bit. By the way, you like what a call on your 150, man. Like to the penny.
Well, I didn't buy at the bottom, even if I said it
was so fast, but you said 150, I said 160, 165. I did call Apple, I said 195, and that was to the penny, 195.
No, you're right. Yeah.
Apple, by the way, looks better than Amazon.
But would you buy Amazon or Apple at these prices? Amazon at
these prices, I would actually buy
Amazon at 175 or Apple at 225.
At these prices, I would go Amazon, but I'm not selling my Apple. Right?
I want you to admit one day you're just gonna pull a Buffett and get rid of all your Apple. Like,
no, I'm not selling my Apple, but I was buying Amazon. I'm not buying any more Amazon. Sub 175, I was a buyer of Amazon all day. And like that was all in here. Sub 170. So I think, Amazon's a weird stock. It gives you these crazy opportunities. Like, look at this. Like, it gives you these type of dip buy opportunities from time to time. So you just have to be ready for it. This guy, it's coming back up into this, like where it was. So hopefully this area ends up being support. And that's probably going to be that 175 here. If I get really granular, and this is like tricky, what you do is if it's breached this low, and see this wick right here?
Yeah.
You take a line and you magnet it right there, 173.75. That is we're going to call this an order block, right? You can call this a price of interest, but this little like scout wick or whatever you want to call it, I think this is a sneaky little order block right here. Sneaky. 173.75. I can pull that all the way across, by the way. This is a big deal type level. All of this right in here. I think this area, you don't have to be super precise, but like this is a big deal level. If I see that, I might be a buyer again, dude. If I see that dip. And I think this mentality that we're talking about right now is going to define the rest of the probably year, is that if there are people with an appetite on this, whatever this next dip becomes, if this next dip becomes yet another higher low, I think we're in the clear, man. Right. And so like it's the market's appetite for net new money long. However shallow this next dip is, because the truth is that we have not had any pullback since that low, right? If we just start bleeding out from here, it's not good, right? But if people step in and they buy early and often, and things start to just consolidate, like after this, I think that's really healthy across the board, and we're hopefully out of like the danger zone.
Do you think Bezos wanting to buy the Celtics is hurting Amazon?
Dude, do you remember? Wasn't he trying to buy the Washington Redskins too back in the day?
Yeah.
I thought he was gonna call them the Amazons, and I was like, no. Do I think it's hurting the stock? Not at this price, but once it gets back to 200s, yeah. Have you checked to see if he sold anymore?
No, last time he sold was, I think, right before August 5th, actually.
Yeah, 200, right? Yeah. So I don't think that becomes an issue between here and 200. I think it's at 200 that you have to know it is an issue.
Yeah, I would be really annoyed if I was heavy Amazon, and that's the reason.
No, like I think that's fine. Like you get at this level, when you get closer to 200, I think that that's time to like maybe flip this to an income strategy until he's done. I think he kept filing for more. So I don't know how much he sold that of what he's planned to sell, though. That I think is more concerning. But I think Amazon looks mostly constructive. Of all the quarters, like this one had to me like the most irrational price action after the report, right? Like I think that was strictly on. Here's the thing, Amit. Like the Amazon flush out here was mostly on that commentary that Jassy had, or whatever, somebody had commentary on the Amazon consumer being weak.
Yeah.
Right.
Yeah.
What are we seeing? Like, that's not tomorrow. Maybe we get this revision and the market thinks that the consumer is weak. But at the end of the day, we still had these last two job reports and 1% retail sales increase. Like, that's not necessarily indicative of a weak consumer. So I think in AWS was great, right? It was just that e-commerce piece. And I think more along the lines of the rhetoric of Amazon's weak consumer.
Yeah. No, that's fair. I think that's very fair. And I think AWS alone is exciting. So
yeah, I just wish I didn't have to buy the e-commerce part of the business.
What do you think of? Okay, can we do Google and then give me your thoughts on this DOJ breakup thing?
Dude, I think you know how I feel about Google, don't you?
I know you don't like it, but do you think it would be better?
I just don't like Sundar. Like I'm not a fan, right, of this whole. Did you see? I sent you the interview, right? Didn't I send you an article about what Eric had said? Like, Eric Schmidt, the old CEO of Google, like goes out, bashes Google on prioritizing work-life balance over like getting the job done. And like, he literally said, what did he say? He literally said, that's why Google's losing, right? He said the reason why startups are doing well is because they're committed, like they're going.
He basically said Sundar doesn't know what the fuck he's doing, and that's why we're behind in AI. And then he had to retract the statement.
Yeah. So then he went around and was like, all this damage control. So I don't think that was really a mistake. It just looked really bad. He shouldn't have said that. But I honestly feel like, I
mean, it's done it went to 155 and now it's at 170. It kind of got rid of all the DOJ concerns, at least in the past week.
Yeah. So as far as the DOJ is concerned, I think the antitrust stuff, dude, like, I think that is always something that's looming for Amazon, Google, and the like. And I don't ever really take it for like a big, oh my God kind of thing. Like, if you own these stocks, you live with that stuff. And you know, for Google, it's like they pay. Somebody's alarm's going off behind me. Sorry. They pay a lot of revenue to Apple. Can you hear that?
Yeah, I can hear that. That's so weird.
Sorry. But like, they also make a lot of money on the money that they give to Apple too. So they're going to lose that revenue. Apple, apparently that's like what was Doxa saying, like 50% of Apple's gross margin from the services. So yeah, that's concerning, but I don't think any of that stuff actually comes to fruition for like multiple years out. And by the time that happens, I really believe that for Apple, it'll probably be a quick event flush, but they'll have a product ready to roll, already probably launched at that point in time. And it might just be a knee-jerk kind of dip that gets bought pretty quickly. For Google, I mean, how many, we're on like failed attempt number 4 or something on that last YouTube video that you played of them doing like the AI assistant, like 4 times they had to try to get that to work. Like, it's cool. And Google's got a lot of stuff in the pipeline, but their execution is just like lacking to me, right? Their execution, the way they're rolling things out, it's sloppy. So, well, I do believe that this was probably created like a bit of a buy the dip, or probably like oversold situation. Valuation, I think, is just fair at this one. But it's not something that, like, unless there's like, I'll invest in Tim Cook, I'll invest in Zuck, right? But and I'll even invest in Satya, but I cannot do it with the.
I wanted you to say you wouldn't invest in Satya, so I could be like, so you're racist. There you go.
No,
you don't want the Browns. Yeah. There you go. That's it.
Absolutely. It's just strictly execution, right? That's it. But anyways, that's my bias, right? But technically, I think you do need to be careful here. Like, this is one of those areas. Session got filled. This becomes like, this could easily. Did I chart this last time? And I feel like I might have said, you know, a lot of times the real setup, the real trade is like here's our line, and it was what we call like a bear flag kind of playing out. That the real.
How do you know that's a bear flag?
ends up looking like that. You don't want to be there. What do you mean? How do I know that this is a bear flag?
Yeah, like how is it? Why is it not a bull flag?
So the pole,
but like,
you know what I mean? Like the pole of the flag.
Not really. I want to explain like I'm a third grade. Like,
so here's a pole. The pole.
Oh, that's a pole.
From the bottom.
Okay.
Yeah. So the pole would be coming from the bottom, and the bear flag pole comes from the top.
So what would a bull flag look like then?
A bull flag?
Yeah.
Looks like this here, this situation. These are a little extended. Let me find you one on a big one. This is a bit extended.
The pole of the flag needs to be to the downside or the upside, right? To make it bullish or bearish. Okay.
Yeah.
That makes sense.
Like there's like pennants, there's flags and stuff like that. Like this situation here would be like more pennant, right? Like if this is the pole coming up,
right,
and then you're going straight across and you have this kind of consolidation, boom, it goes.
Oh, because the consolidation is what creates the bullish trend to the upside.
Got you.
And then same thing on the downside. If there's consolidation to the downside in a straight line, then you're potentially going further down.
Yeah. So like coin.
Yeah.
Like this is your flag. Yeah.
Right. Okay.
But coin on the daily before, like the whole thing about this is like even on like a weekly, this was looking really bullish for possible. This is weekly pull up flag. It looked like it's going to go. But like the thing about patterns, like I'm not a pattern trader, but you have to know what they are. When Coinbase looked like this, it looks really good. A lot of consolidation, looking like it's going to go. But when you have the whole market looking at this setup right here, and then it fails, that becomes one of the most bearish situations that you could be in. From like, what's funny, because like, did you see it? It was going and then it fails.
Yeah,
that's no good, right? Like all of a sudden, like the whole market is looking at it because they all use the same kind of stuff. And here
let me ask you this question in the context of Google and Tesla. Waymo announced today that they're doing 100,000 paid trips per week, autonomous. Google owns Waymo. Is that not bullish Google, kind of bearish Tesla because they're doing 0 paid trips?
No, I think it's a different technology altogether.
Well, right. I mean, what's so different about it's autonomous driving at the end of the day?
No. It's the mapping, right? Like you have to have a pre-mapped area for Waymo to work, right? Like that's a serious thing. Like you can't just, it's not really autonomous, like to that extent. Like you have to have a pre-mapped area.
But in general, isn't that better than nothing from Tesla? Like 0 progress?
Not really. I mean, that's, I guess, like, cause like is it 0 progress? Like Tesla's making money on FSD.
Yeah, but there's no robotaxi picking me up in with Waymo. They're doing 100,000 of those a week. I mean,
I don't know. Like even when robotaxi gets launched, are you going to jump in one right away?
No, but my point is, I don't even know if it'll be available. It won't even. I don't know if it's going to be available in my location. If I was in Austin or
where do you live?
I'm in Jersey, and Waymo's not here either. But in San Francisco or Austin, you've got a lot of I'm obviously more bullish.
They're all over me, right? They're all around here, right? They're here, right? But
so obviously, I'm more bullish Tesla here. But my point is, does Google deserve any level of congratulations for this?
You can give them a cookie, maybe a clap, like a golf clap, right? Right. But I mean, but how much have they invested in there? I still think that Waymo is like, it's like probably like Mobileye, like Aptiv. I feel like it's like, why are you even spending? This is what I'm saying. Why is Google putting assets behind Waymo when we know it's going to be a prehistoric technology the second that like real FST comes out?
So that's your point. Your point is Elon
like,
is so on the cutting edge.
Like why? What kind of business decision is that? Sorry. Like
you're saying Elon is so on the cutting edge that Google is behind the trend on this massively.
It's a different technology. It is a different technology, right? Like it works different. Like there's no pre-mapping. Like yeah.
Okay, quick question for you, and then we'll go to the next one. What do you think YouTube's worth independent of Google? It's doing 30 billion. Let me give you some stats. 30 billion TTM, profitable, but we don't know the margin. 100 million YouTube premium subscribers, and
Well, we
have,
know you're a YouTube premium subscriber. We did find that out when you're showing how you watch Breaking Bad for sure.
oh yes, exactly.
But
But my point is, like, I think it's closer to 400 or 500 billion by itself.
yeah, so like I think that YouTube is the one. Even what's funny about YouTube is like, and what's the market cap right now on
1.9 trillion,
2 trillion, just over on Googs. I mean, a quarter, I feel like it might be worth more. Maybe if because the only thing about the ads on YouTube is like, if you guys are watching now on YouTube, on amidst YouTube, and an ad pops up, you're just like hovering over the skip button. Like you can't wait to hit freaking skip. And I think like that large advertisers know that, and they probably don't make as much money as like a maybe even they probably make money on the shorts, right? Ads on the shorts, because you're not really.
But no, I would disagree, because even though you're right, like everyone's instinct is to skip the ad. Why do they keep making 8 billion a quarter? Like advertisers keep dumping money into YouTube.
I think they could be making a lot more, is what I'm saying, right? Like
how?
Like if you couldn't skip, or like maybe if shorts becomes a bigger thing, like apparently it's growing, but and then you catch ads like that on shorts, can't skip most of the time anymore. Yeah, I look, if you go on Twitch, like Amazon Twitch,
I hate Twitch, dude, because I
cannot skip. Like you cannot skip.
It's annoying. Yeah, it's annoying. Okay, yeah, I agree. I think YouTube will be valuable. All right, let's do this last one, because I think you got in this, and your boy Ackman sold Google for this, which is Nike.
I did. Yeah, this was a wild one. We talked about this too, and we were like looking at this kind of consolidation. And actually, I took it a couple times here. Look at this. It was here. Price of interest $71 with the stop.
You're trying to humbly say you got the bottom. That's what you're saying.
Well, what's important?
That's why we want you on the show, Jason. You got to be not humble about it.
Here's the truth. The truth is, people sniping the bottoms does not impress me, right? I don't think that matters. Anybody can snipe a bottom, right? Pick a bottom. What's impressive is if you time the ride and get out at the top, right? That's impressive. And I'll tell you, I didn't do that, right? I had to jump in here twice, because I saw this and I closed, and I didn't reload here. So I closed up here, and I didn't end up reloading, because I was in over here, and it started to come down. I took profit, and I think I closed right here. And then it came back one more time, and this was like a banger buy. And I ended up taking it reload here, 77s for some 85s, which I just ended up closing today, even though I'm thinking about do I really need to close it today? It's just one of those where it's not the stock. The stock is not telling me that this is a trade, by the way, not investment. Investment, I think you can ride this to 95s easily. But this is when we're okay, we've gone 2-3 days sideways. I don't need to wait around. I might get a little bit of a pullback. That might be another buy the dip around 79, something like this. But it's got a little bit of upside. I just have so many catalysts on deck that I don't need to have a whole lot. But I think you get to this 95. You probably get a little stutter step at 89 eventually. This is what I'm talking about. This is we're primed for this activist type of situation. But yeah, this was a good bottom snipe for sure, from any way you slice it. And yeah, it worked out.
Why do you think Ackman bought 3 million shares? Is it a trade for him, or do you think
I think it could be a trade for him for sure. I mean, he's not super activist, right?
I don't. Yeah, I kind of think he's buying it for the Olympics pump, to be honest.
You think so? There was no better trade than buying Nike for the Olympics pump after this massive dump.
That's the only way I can rationalize it, because I don't know why the hell you would sell Google for Nike. Even though Google's struggling, I don't get that at all, bro.
I think that by the next 13F season, we'll see that he sold a lot. even off the lows, like this is a really good bounce. Like even if you didn't get the lows, like this is 16, but I do think you get to this 90 something level. So you get a 30% bounce on this. That was like generational lows, and you keep some on the sidelines. Like you take your principal out and you leave your profits forever in perpetuity. You forget you ever owned it kind of stock. Cause you got a really, probably a really good buy. Hopefully you got a really good buy right in here. But I do think that this like creeps back up into those 90s type level. I would not sell like equity. I would just kind of like ride her out. I wouldn't necessarily like add. It's just one of those where like, look, I think that was a good spot. It was a really good spot to take a stand if you at all like the company.
Do you have any thoughts on Ulta? The
I thought you were going to ask me about Ruru.
What? Which one?
Ruru.
Oh,
Ruru, I'm on. I feel like I'd rather step in on Ruru. This I think is like prime for activists too. Like if there was another stock that I would say is same kind of category, prime for activists, Lululemon, probably.
You like that over Ulta? For you?
I don't think anything's wrong with Ulta. Like, I mean, and Ulta is not like at that big of a discount. I think like if you don't own Ulta, like, can you step in here and buy a little bit? Yeah, Elf was doing actually really good too, right? Were they? Estee Lauder. Did you see Estee Lauder? Oh my God, demolished. Estee Lauder.
Yeah, that one got hit.
Great stock right there.
I didn't even know they were public, dude. I didn't know Victoria's Secret was public. Apparently they were.
Oh yeah. VSCO. I did buy a nasty one.
What did you buy?
Do you buy Vans? Do you own Vans?
Dude, Vans are still a thing.
Dude, VF Corp owns Supreme, Vans.
They own Supreme?
Well, hear me out. So yeah. So VF Corp has Vans, North Face, Timberland, Dickies, Eastpak, whatever, JanSport. They own Supreme. They just sold Supreme, and they also just hired like a Lulu exec to clean up their finances. I did buy this thing, like we're over here, but look at yeah, this thing is down in the dumpers.
What's the market cap on this one?
Not
6 billion.
Yeah,
dude, it's not 30% in the past 3 months. It's up.
Yeah. It's not a 10 bagger, but like, hey, look, if you did want to go bottom fishing for activism, well, they did, like they hired that Lulu exec. So I think they're already making some kind of moves.
Oh, can we do Starbucks?
Oh,
because
that was the other activist one. Yeah. So we did talk about Starbucks last time, right? We said it might pull back a little bit, did exactly what we were talking about. What did we say? We said about like 93, something like that, 92. And then it goes into a holding pattern for a very significant period of time. Where is Starbucks trading since the last time we talked?
Same level.
Exactly the same place. So when you asked me, do I think it was good to buy puts, boom, like out of the gate? And I said, absolutely not. Yep. And maybe for like a quick day trade, this is your quick day trade. Boom, one day, one and done. And that was it. Would I have gone out and bought calls right there? Hell no. Right. But I think I think we come back, you and I look at Starbucks next week and it's sitting at $93.
Why did you immediately say no when I asked to buy puts when it jumped to 93? What was your instinct there?
More often than not, remember, like 80% of the time, stocks are just going sideways, 80% of the time. And the best time to like put on those neutral trades are after a giant move like this, right? So like activists enter, we know that they're there, reprice the stock. It's like when somebody is saying like, hey, we're going to be bought, right? Someone's going to acquire our stock. It's like you get this big move, but like, do you press that bet? No, right? Like not until something happens or things start to fall out does it come back down to life, right? So you have to hear the plan. You have to see if there's anybody else involved. You have to see some actual movement from a fundamental perspective at this point for this stock to move. Or maybe another activist gets involved, another one, and then maybe you get a little bit of a pop, but it's not going to be, it's going to hit that $100 psychological level. But I think this is one where like, I looked at that volatility was primed to sell. And those are the situations where I would say you get those things, it's still up there. But you get those kind of moves. The first thing you should be thinking about if it doesn't, so the first thing you should be thinking about is like not chase, right? But like the second you have this, you try to make a new low, it comes up and you make a lower high and you hold the lows, you're just going sideways. You should immediately be thinking like the next 2 weeks, this thing goes like literally nowhere.
Right. All right.
So I think it's a wait and see. Show me story from here.
Yeah.
This one's not going to run away from you either, if that makes sense. So like if it starts getting over at 95, cool, you got another $5 plus, maybe 8. You could take that from there. If you're in before here, there's no reason to sell, right? If that makes sense. Like if you're in, like unless you think that you're at your target, but I don't think there's a reason to short this unless you hear like maybe an activist backs out, then you short this and you short it all the way. It's going back to where it came from.
Well, they gave the new CEO 130 million, so I would imagine they're confident that he'll.
Which kind of, by the way, kind of put the kibosh on my Chipotle trade, right? Because I was long Chipotle here. I still don't think that the CEO leaving Chipotle is like, it doesn't really deter me, but it might. I think it's going to deter the market, right? So I wouldn't sell my shares, but like an options trade, I think this one also kind of goes into this kind of holding pattern, lower high, higher low. It's definitely going to be consolidating for a little bit.
Yeah.
Bummer though. Well,
yeah, and again, I think when you get offered 130 million, they're also letting him work from home. They don't even want him to come to Seattle at the headquarters. Like they're legit. They're in love with this guy, dude. They're just like,
dude. I mean, he's the turnaround man, right? The thing is, like, I think he turned around Chipotle, right? He did his job. Cool. You can move on to the next. Maybe it's like, is the COO of Chipotle, is he getting promoted for sure? Do we know?
Not full. I mean, he's the interim CEO, so
yeah. Well, maybe we need a little clarity on who the next CEO is for Chipotle for this to move. But I think this will get stuck too, unfortunately.
All right. Not bad.
Bitcoin.
Yeah, let's do
if
Bitcoin
this
last.
fails, it's gonna be this weekend, I think, or like one of these random Saturday nights. So,
dude, so you're expecting like 40,000 or something?
I hope it doesn't happen, right? But like so I don't think this is a sell your crypto. Like never sell your crypto. Never sell your crypto. But if we get a dip, I think it'd be like this 43s.
Wow, that'd be
right here,
dip, dude.
Yeah,
that'd be a nasty dip.
It would be. But it would be there for like, you won't even know that it happened because by the time you wake up, it'll be back up here to 50s.
Yeah,
like legitimately.
That's what happened on August 5th when it hit 49 too.
Yeah, you probably didn't even notice, right? So that's when like I'd be ready to throw some like limit orders out there. I have them sitting there right now just in case, but like you never know. But yeah, that would be the dip. But at the same time, it's like I think it's kind of like a no trade zone right now because this still could do this.
And this is going to determine MicroStrategy, Coinbase, all of these at the end of the day.
No. MicroStrategy is a Ponzi. We already established that.
Yeah, we did, but at the end of the day, MicroStrategy will run if Bitcoin goes to 100,000. MicroStrategy is going to be $250. Like we know that's happening, right? Yeah, I'll go against your TA on this one. MicroStrategy will go higher if Bitcoin goes up. I would bet you like $1,000.
Yeah, I wouldn't bet against that one.
You could say it's a Ponzi all you want. At the end of the day, people.
Yeah. No, I get to say that, right? But yeah, like you're not wrong on that for sure. But look, it's not like, is this where Bitcoin's traded at? Can we do this?
The charts are weird because it trades at a like.
See, now it's just excuses. All of a sudden,
no, but that's real. It trades at a different premium, so the charts don't always look the same. But I would argue the charts are more similar than not similar. That's for sure. Yeah, look at that. I mean, that's relatively similar.
It's relatively similar.
Also, I like Sailor, bro. Sailor's a smart guy. I need to do a podcast with him.
Yeah, these are really, really similar.
Look, I think at the end of the day,
so what would that be? That would be MicroStrategy at Am I like looking at this right? At 80?
Yes, correct. 80 to 90. Yep. I mean, I think people would buy the shit out of that, dude.
What a dip, right? Like what a dip.
Yeah. Someone wants to do CLSK. Do you want to do that real quick? I know that'll trigger you a little bit, but
That's fine. I mean, they're all starting to like pick up. This is the same setup as Coinbase bear flag.
Yes, I can see it now. I see the bear flag. Yep, I
like
see it.
If I inverse the charts, Alt I, right? Then you see it. It's like
So that's a bull flag on the inverse, right?
Yeah, could be. So it gets invalidated over 1280s.
Okay.
This is actually an interesting pivot on CleanSpark since like inception. 1280.
This thing ran to 42 last cycle when Bitcoin was at.
Sure. Yeah. So like this is actually 1280 right here. I mean, there's a lot of dilution in between. I wouldn't be net long under 1280. This is where one of those where like even Disney, like we talked about Disney, and I said like, could you buy it? And I was like, I'd be more inclined to buy it over 90 as it's going up, like a little bit more confident. Otherwise, like I'm just buying dips, and I don't know when it's going to stop dipping.
Yeah.
I don't know when it's going to stop dipping on this one, but this is not. It's not even like the MSTR equivalent.
Yeah, it's definitely not the similar chart to Bitcoin. Okay, is there any other? Well, we'll end it out with any.
Mara did something similar to Mara. Did you cover Mara? They like had this major fail on like need to shut their servers down or something.
I feel like I heard that news, but it was a while ago. I didn't.
I think it was recent, right?
It was recent. Yeah, and there's other accounts that cover it better, but to me, I just don't trust Marathon. Like I like CleanSpark a lot. I at least know their management better.
I think that's fair, right? But I think they all have that same. They all have that same kind of risk.
Yeah.
I mean, Mara's proved there. Well, Riot's the worst one, right? Like Riot did shut their servers down. So they're not even running right now, I don't think.
Yeah, the next earnings for these guys, if Bitcoin doesn't pick up, are not going to be. What are your thoughts on a single stock leveraged ETFs?
Okay, I love those. I did an interview with Will, the CEO of Granite Shares, who runs a lot of those. You talking about BITX?
Yeah.
Yeah, so I like these a lot. So I like them as trading vehicles. I love them as wheels, like as selling premium. This is like, don't ever buy options on leverage ETF to me because you pay double the volatility.
Yep.
But if you sell options, this is your jam. You should be selling options on BITX, TNA, right? TSLT, NVDL. Those are the ones that you should be living on for your wheel. One, because they're not investments, and I hate selling upside covered calls on my investments because I never want to get called away, right? And I'm happy to be called away on a leverage ETF because you have like these diminishing returns. But yeah, like I strictly only run my wheels on leverage ETFs. You get double the premium, super juice premium. I'm not worried about being called away. I love them for that. I also love them if you're a good medium-term swing trader to catch like a nice little run on Bitcoin or something like that. This is the deal, right? Like options are complicated. You don't have to deal with volatility. Also, you can't sell options in the pre-market or after hours, but you can buy leverage ETFs in the pre-market and after hours also, and they do trade active. So I do love me some leverage ETFs from time to time. True story. FBL, they have it for Facebook, for Meta, right? AMZN is 2x leverage. Amazon, there's 2x leverage for everything. There's no 3x leverage because you have to be like ETN to be a 3x leverage. But anyways, I'm on a tangent. But yeah, I know the guy who runs Granite Shares pretty well, and also Rex Shares. So we work with both of them.
Those are the parent companies of a lot of these.
Yes. Yeah. So I think BITX is Rex Shares, TSLT. I think is, so T-Rex, TSLL is Granite.
And they still make a fee on these, right? That's how they make money.
No, dude. It's really small. Like it's like sub 1% per annum.
How do they make money then?
It's that's their money, right? But their 30-day spread. Get out here. They'll tell you.
Yeah, it has to be from the fund management fee, but the fee.
If you want, I can bring one of the CEOs onto your show.
Yeah, dude, I would love to just talk to them because this is.
I can set that up instantly for you.
Yeah, because these have gotten a lot of. I mean, obviously NVDL, dude, has 5 billion in AU. I mean, that's insane.
Yeah. So Granite Shares runs NVDL. Yeah. So Granite Shares runs NVDL, and that's like.
That's
they have a sticker Derupt, dude. It's hilarious. It's actually good. So the ETFs fund list.
By the way, there's a MSTR 1.75x leverage one coming out soon.
Yeah, these guys they've already like reserved all of their it's like 6 billion AUM right now. Is that crazy? And I was trying to talk to Will, who runs this company. I was like, dude, can you please get us some kind of tracker that shows the AUM as they're going up and down so that we can see like, okay, these guys are exiting NVDL or they're entering like AUM's going up. But yeah, it's crazy. Look at that. That's insane. So here's your percentage. Expenses 1.15% per year.
That's wild, dude.
It's really not that much.
It's really not. It's not at all. It's less than some of the other ETFs that are out there, the bigger ETFs.
These are actually, they're pretty, and these do ConL too, Coinbase leverage. Yeah.
Okay, can we do 2 more and then we'll end it out? AMD and HIMS. Those are 2 popular ones.
I think a lot of people are in HIMS right now. HIMS is at a pretty important spot. I think so. Like HIMS, I think at 20 something, like, look, everything was priced in, good side, and then they had earnings, and it was kind of like up here. They caught the lawsuit, right?
Yeah. Yep. So
up here they caught the lawsuit, and I don't think any of that revenue was real. The lawsuit meaning like, okay, so they're selling GLP-1s and the compounded GLP-1s, right? And people are basically not dosing appropriately, taking maybe double what they should be, things like that. But that revenue from even compounded GLP-1s, I don't think was really in here anyways. And that's why people were expecting this to go up. They got hit with the lawsuit beforehand, but I think that a lot of that good news was priced into the stock at $25-24, right? So to be fair, I think this was like Target acquired personally. And so now you have to get a lot of that kind of like legal stuff off the deck. But at the end of the day, it is a critical spot for the stock at 1543, right? So from this low to up here, is it this one? Yeah, you're barely reclaiming in here. So if this is over 17, 16, 80, I'd say 17, like you're likely coming back up to the low 20s. This is a good place to take a shot, but if it gets below 1540, exit stage left because she could go down lower. But between now and then, like it's a good spot to take a stand.
Right.
Take a shot. I think so.
Okay, and the last one is AMD.
AMD, I think, is a short here now. So this is my big area here. So 165. I think you keep telling me that like Amit says yapping that AMD is overvalued. That was what he said. Yeah. AMD is overvalued. He's all up in my DMs, guys. I don't know what to say. But no, I think today's price action is kind of telling on specifically AMD. This right here, this really big like top wick on a larger medium time frame. This is telling where we call this like an exhaustion, maybe a little bit below off top, but mostly exhaustion here, where it's like pushing, grinding, huge move. And you filled this prior breakdown, boom, 161. I think it's got to rest. It's got to rest.
Well, the growth is, dude, their peg is 3x NVIDIA's peg.
Yeah. So that's what we talked about this last time. Like, it's more expensive than NVIDIA.
It's a lot more expensive than
And
NVIDIA.
I could not understand why is NVIDIA not really ripping the way that AMD is ripping like the last 2 days or something, because NVIDIA is kind of like stalled out the last or today. I don't know. I just felt like the move on AMD from the lows it felt like more explosive, but it probably wasn't, right? Let's see. I don't even know how much it was.
What was that, 20%?
30. 33%. I mean, it's not.
And they dished out $5 billion to buy a company yesterday as well.
They did, a server company though.
Yeah.
So I think that's interesting. I think that kind of puts this whole situation a little bit on pause, just because we got to figure out what does the market want to value that. Does the market think it's a good deal or not? We'll see. I think this goes into a rest. I don't know that it's like a sell your stock hammer short, but like rest, it could rest to 150s, low 150s, right here, 153. So this area, 153s here, becomes important. So I wouldn't be putting, if you're a fan of AMD, I wouldn't be putting new money to work above 153 is my point in saying this. And that, I think, is when we talk about trends and trading, like if you're investing, I'm going to say it differently. Like investing, like when we talked about NVIDIA trading, you don't want to be net long NVIDIA unless you're over 123 because you know you have a good trend. But investing, you don't want to put new money to work over 123. You want to be buying it lower. So it's a little bit of a little bit different type of like logic.
SMCI also swung from 480 to like 600.
Over 600.
Yeah. So I guess the market likes the server companies to an extent when they get sold off, and AMD buying it, maybe that makes them more efficient.
Yeah, maybe. So I think that AMD can come down and really just kind of test in here. Like your upside trade is complete, right? It doesn't have to break lower, but right here, right now, if you start going lower, you might have a nice little short trade for a little bit. And I don't think you need to buy a lot of time. It's just like a very near term $10-ish type swing. But, if I was looking if I wanted to be buying the stock, I would be looking in these 145s area right in here, maybe. But I'm not, it's not really my thing, but I think that makes sense from a pullback perspective. And it would look like a chop, right? Little bit, boom, boom, quick. And then before you know it, you blink your eyes and it's gone. Technically, that's normally what it would be. ARM developing. Yeah, ARM is getting, I don't know.
Well, you think of AMD is overvalued. I mean,
yeah.
Were
you on the ARM conference call?
No, I was not.
I heard it was a cluster, dude.
Really? Why?
I don't know. I missed it. That's why I was hoping that you were on it. I didn't hear it. But I heard it was like
they were down like 10% that day, I think. ARM was.
Yeah.
They're very important in the broader AI landscape. I just think SoftBank is squeezing the shit out of it, and I don't want to be part of that.
Their shares aren't even, that's what's always kept me out of ARM. But their shares, their ownership stake is not even listed on it, right? It says it's not even, they own like 90% and it's not even part of the float.
Yeah.
ARM is at an interesting spot, and knowing that 90% of the float is taken up, this thing can move really wild.
Yeah, I mean that's why it's moved so much this year.
Yeah.
Can we? All right, last
Lily
thing.
looked good.
Lily.
Yeah, SMCI. I think so. Like from 470s, this was that pivot low. I honestly think that I'm not a big SMCI fan. 35 billion, but I don't think it's overvalued. Is it half of Dell?
The problem is if their margins don't get a little better, I don't know how much leeway they're going to have with the street.
I bought this SMCI dip, but I feel like I should just sell it because I'm not a big like fanboy of this company.
Well, I would wait till, because if NVIDIA runs, I feel like the whole semiconductor market will run.
That's fair.
That would be my sell.
Yeah, and Dell's going to report next too.
And Bank of America still is, they have 160 on Dell. I mean, they're bullish on the operating market. Can we check out SoundHound real quick?
Oh, dude, you're killing me.
I know I don't like these either, but people
It's going to the moon. Is this your next 10-bagger pick?
I mean, I pick SoFi over this one. Or Rivian.
Oh, dude, nice. Outside day. So on a stock under like $10, you don't really ever want to look at anything other than the daily. I think we talked about this. But I mean, this is just firmly in consolidation. You can just see here it's stuck, right? Like this to me either needs a squeeze or a catalyst. So you just look at like what's the float, how many days to cover do the shorts have, how much of this is sold short. I don't know.
Oh, for SoundHound, I think it's like 15%, 15 to 20.
26.8.
Okay, so it's a decent amount.
I don't have these short float checkers for like DT days to cover. That's a lot.
I mean, that's almost 30%. Yeah, that is a lot.
Yeah. So this is a short squeeze type stock. So you have to just,
Well, the thing is, it already squeezed. Like you look at that chart, it's squeezed already at one point. It could squeeze
again. Short again. Right? They short it every time it gets up there. So just that's what it is.
Okay, so let's end on this. Overall,
I don't know this company though. We talked about. I'm not in. I think it's too far in the weeds to be ready for prime time.
Yeah. Rest of the week we have BLS and we have JPAL. What do you think happens?
Wait, don't we have something else too?
What do we have?
We have FOMC minutes tomorrow.
Oh shit, we do. Oh boy,
yeah.
That'll be interesting.
So we have okay, it's a crazy. So we have BLS tomorrow, which I don't know. I don't know how big of a thing it's going to be. We have FOMC minutes. This is like around this. I think these are West Coast time, so that's like at the. Is that really towards the close?
No, it's at 10 a.m. We get the jobs
minutes.
Report. No, jobs is 11 a.m.
No, FOMC minutes. So these are the notes.
Oh yeah, that's always at the close. It's always at 2 p.m. Yeah, 2 p.m.
Yeah, so these are at the notes from the last.
Are we really gonna learn anything that interesting? That, like again, I mean,
you're gonna hear about people possibly talking about this. They're gonna be all over this, man. They're gonna be like, was anybody legitimately talking about a 50 basis point cut in September? They're gonna be like hunting through these for that. Like, was that in there? And it's all about like the speed and like what's the trajectory of rate cuts, if at all, right? And are we talking about right now the market's priced in about 100 basis points, right?
No, I think it's 75 for the rest of the year. You think it's 100?
I think it's 100.
What? I don't know if we get 100 for the rest.
I know, that's what I'm saying. So they're targeting, they're targeting 4% for January.
We're not getting 4%, bro.
That's what I'm saying, right? December 4.25. That's what they're sitting at.
I don't know about that, Brody.
So I think this might be a little aggressive, and this like that's when I say markets pricing in. This is CBOE FedWatch tool.
They're doing the same shit they did in March when they said we would get 6 cuts in March, dude. Remember how crazy that fucking prediction was in January?
That's crazy.
And then inflation.
People are still hanging out with us, just yapping. I'm looking at the comments like people are still here, dude.
Dude, they love you. We have 617 people. This is a great time to say follow Jason. Let me put his Twitter in the chat, and you can access all of his.
What are our thoughts on Elon working in the White House, dude? Dude, would that be wild or what? Elon gets tapped for the White House.
Well, the thing is, he can't be an actual cabinet person because he would have to leave the CEO job. So he'd have to be some type of consultant or advisor.
Yeah.
But dude, I think he wants Trump to win.
Would you vote for Elon for president if he was an American citizen?
Oh, 100%, dude. 100%.
Oh, yeah. All right. Elon for president.
Well, let me ask you this question. And you don't have to be super political here, but what do you feel about this tax policy that Kamala wants to do at 28% corporate rates? You've worked in corporate America for a long time. By the way, Trump just beat Kamala in the polls for the first time in 2 weeks.
Well, I think it was that amnesty situation, dude, that was crazy.
That
I
is
was
well.
looking at it, I was like, holy, what? Like, that's insane.
In your opinion, does 28% make more sense than 21% where it's currently at?
I never really got into the weeds on that. Like, honestly, it never really affected me as an individual. It's like, I can't really, like, does 28%, I don't know.
Do you think it would affect your investments at least is the question?
No, I don't think it would at all. The only thing I'm thinking about right now is like, okay, you go Republican, you're long the consumer, right? Democrat, you're long, I don't know, clean energy and weed. Sucks. But
what about the 25% unrealized gains tax for 100 million? I don't think you're worth 100 million, but
dude, there's no shot that goes through.
Yeah.
Like, I mean, if it did, I mean, that's wild. But like,
I'm asking the questions.
I would have to we would have to leave and get new careers, dude.
Like, yeah, 28% is, I mean, or 25% of that is crazy. The reason I'm asking though is because Kamala was
corporate tax.
Well, the thing is about corporate taxes, I think they'll find loopholes, and I also think they're going to raise prices on consumers, which would create inflation.
You know, we're at like generational low tax rates too, right?
Oh, 100%.
Like
we haven't raised them in 40 years,
which is really weird to think about. But like, we are sitting at generationally low tax rates. Even at, you know, I live in California, it's 51.9%, right? 51.9% coming in net, right? Like Fed, and then 11.25% going out. So like whatever that is, like, I don't know, it's bad. But yeah, it's
well, the thing is, over the past 2 weeks, she's been ahead of him. And over the past 3 days, he's taken the lead again. And it's kind of because these policies are starting to not resonate with a lot of moderates.
Yeah, well, she didn't, to be fair, like when she was ahead, it's like it wasn't really clear, and it's still not really clear, right? Like
it's not really clear at all yet.
It's coming out, right? But like as her policies start to come out, and then she's going to have a debate, right? Like that's going to be interesting. She came out, was it last night? She came out for a little bit and said a little blurb, but yeah, I think we should, I got my popcorn ready, ordered for like the debate for sure. That's going to be the interesting one. But yeah, I think as the policies start coming out now, people are like, okay, what's real here? What's not? Because when it's not clear, it's like, it's all, you know, pink cloud, rainbows and sunshine, right? You don't really know.
Yeah.
So.
All right. Jason, thank you for joining again for 3 hours. Appreciate it.
Yeah, the lady's calling. I gotta hit the road. But it's been fun, man. I will see you on the next one, and we'll be live on Spaces too. I think Thursdays.
Yeah, we'll be live on Thursday as well for Spaces.
Cool. All right, man.
All right. Thanks, Jason. Talk later.
Appreciate you guys.
Bye.
See ya. Bye.
All right, cool. That is it for today. Thank you everybody for being here. Yeah, after the bell, I mean, right before the bell, the Kamala 25% wealth tax thing that she reaffirmed, that I think, I mean, Adam just texted me the poly market link, so this is not an old one. This is, Trump was actually neck and neck in the morning. Now he's at 50-49. So I think that last policy affected it. We'll see, dude. Maybe when Trump gets specific and he says, I'm definitely doing these types of tariffs, the market's like, we kind of would rather have corporate income tax go up than tariffs. Like, we don't know. So I think this is still neck and neck in terms of at least how the betting markets are feeling it. And right now they're not loving Kamala's economic plan, but maybe they don't love Trump's either. But we'll find out in the coming months. And that debate, I don't know if it's even going to happen yet. Trump said she wasn't going to do Fox News. She wants him to do the ABC News. So I don't even know if they're really going to do the debate. I think it's going to happen. I think we'll get definitely one debate, but not sure when and how they're ultimately going to get that done. But it'll be great TV. And I definitely am going to have to stream that debate. I'm absolutely going to have, there's no way we're going to have to stream that debate and see how it plays out. All right, I think that's it for me. Tomorrow's going to be a big day, 10 a.m., that BLS survey. I'm personally expecting a bit of a dip tomorrow because I think it's going to come in hot, and that's where I would be buying. but it depends on how bad it actually comes in. If the market ingests it and just moves on, that would be a very bullish thing. If we can say we lost 1 million jobs and the market's like, we kind of don't care. So that tomorrow is going to be really important at 10 a.m. JD.com again is down 9%. Apparently Walmart sold like 10 million shares or something after hours. So that news broke. And then earnings tomorrow in the morning. We had Lowe's today, which was good. Earnings tomorrow, we actually have Target. That's a big one. And TJX. Oh, wow. And then after hours, we have Snowflake and Zoom. So those are two big ones, Snowflake and Zoom. So we'll see how those end up doing after the bell tomorrow. All right. That's it for me. 8:45. We'll be back. Thank you, everybody, for joining. Hope you guys appreciated it and enjoyed Jason being on here. His Twitter will be in the description if you want to check him out. And I will see you guys tomorrow in the morning. Thank you, everybody. Have a good one. Good night.